Here's to the third annual C4I event, Climate Change and Insurance, how we got to work together. I've got Katie Dykes over at Deep, got Andy Mais over at Insurance. We had a lot of the property and casualty folks sitting around the table with us just a few months ago. You know, one day we're irrigating our fields, the next day they're flooding. We have flooding all along the coastline as well. We have rain bombs. All the effects of climate change. We've got money for resilience. Where should that money go? Where will it make the most difference? There, I think our friends in the property and casualty can be a big help. Thanks for being there.
Commissioner Andrew Mais, NAIC colleagues, distinguished guests, ladies and gentlemen. Good morning. I wish to thank Commissioner Andrew Mais for the gracious invitation to speak at this year's Connecticut Conference on Climate Change and Insurance, or C4I. I'm glad to be joined this morning virtually by fellow insurance supervisors, academics, and members of the financial services industry. We're here today with a common purpose: to learn, engage in discussions, challenge existing paradigms, and most importantly, to listen. C4I's agenda this year encompasses a comprehensive range of topics where insurance supervisors, public sector leaders, and legislators have vital roles to play, be it bridging data gaps, cultivating resilient and sustainable practices among insurers, or fortifying resilience through legislative initiatives. These topics are at the core of how the climate crisis is impacting the insurance industry, its customers, and our communities, and where thoughtful, bold, and collective actions are needed. It is important to remind ourselves that the insurance industry has been managing natural catastrophe and weather-related risks for decades, making it a crucial player in addressing climate change. Insurers manage significant investment portfolios and are increasingly investing in renewables and low-carbon assets, supporting the transition to a greener economy. Insurance also acts as a financial safety net, shifting a portion of the financial burden from individuals and businesses to insurers in the event of climate-related disasters. Insurers offer specialized policies such as flood or wildlife insurance for climate-related risks, of which some of the most sophisticated are right here in the United States, aiding the recovery from climate-induced losses. Insurers also invest in research to evaluate climate-related risks, to better understand the impact of events like natural disasters and extreme weather on their policyholders. In addition, insurers advocate for climate-friendly policies and are progressively implementing eco-conscious practices within their operations. It is very encouraging to see how the insurance industry is contributing to climate change mitigation and adaptation. This is good news for our societies and communities. Three important questions remain. What more needs to be done? Where can private sector initiatives be complemented by public sector intervention and assistance? And what must change to bring about public-private synergy and multiply our combined efforts? I am hopeful that today's C4I discussions will provide some answers to these questions. Insurance supervisors can likewise contribute to robust climate risk management and ongoing public-private partnerships that facilitate national and global decarbonization efforts. Supervisors at the International Association of Insurance Supervisors, the IAIS, and the Sustainable Insurance Forum, the SIF, are collaborating and working collectively towards this end. First, to strengthen supervisory expectations, the IAIS is reinforcing the importance of incorporating climate-related risks into insurers' business operations and risk management practices by providing additional guidance on supervisory expectations, including through an ongoing review of applicable insurance core principles. The first of the three consultation papers relating to climate risk supervisory guidance was published in March. This outlined proposed changes to the ICP introduction to position climate risk within the global framework for insurance supervision, and further proposed changes to the existing supporting material related to governance, risk management, and internal controls. The second consultation paper will be published next month and will cover supervisory guidance related to market conduct, including greenwashing, together with an application paper on climate risk scenario analysis. Second, the IAIS has undertaken work to improve the availability and transparency of climate risk-related data. Climate data elements have been incorporated and analyzed in the IAIS's global monitoring exercise for the last 3 years, and this will continue. Each year's data collection and resulting report contribute to a global baseline of climate risk data and helps enhance the supervisory community's assessment of the impact of climate change on the global insurance sector. Third, with the finalization of the ISSB's sustainability disclosure standards, the IIS has embarked on new work relating to climate risk disclosures and regulatory reporting for the insurance sector. It will study the type and nature of climate risk disclosures that can provide supervisors, investors, policyholders, and other stakeholders with the information they need to assess the risk to an insurer. The aforementioned priorities of the IAIS are meant to be iterative and mutually reinforcing. Climate change awareness reinforced by standards, implemented through scenario analysis and effective risk management, supported by quality and available data. It is also a necessary cycle, one that encourages insurers to invest in modeling longer-term risks and understanding the potential implications, and to appreciate the actions that are required now, even as different parts of the financial sector contribute to an orderly transition towards net zero. While the IIS has a more extensive membership, the Sustainable Insurance Forum is a UNDP-supported grouping of about 40 like-minded insurance supervisors looking specifically into sustainability issues. Through its research and exchange of best practices on climate and biodiversity risks, the SIF is adopting a pathfinder role for the insurance sector by probing further and invoking deeper supervisory discussions, including on less explored areas in the sustainability space. A 2022 high-level stocktake among SIF members found that a number of supervisors had begun to include climate-related risks in their capital frameworks, mostly in own risk and solvency assessments, or ORSAs, and more were planning to do so. The SIF is conducting a deeper dive into the exact approaches taken, particularly among leading insurance supervisors. Another area of SIF's focus is net zero transition plans. The SIF is gathering views from insurance supervisors on national and supervisory thinking on transition plans and aims to enhance understanding among its membership on the progress of transition planning and development of transition plans by licensed insurers. Let me take the opportunity to share some updates on the work we are doing here in Singapore to further origination and access of ESG data, climate-related disclosures, and transition planning. MES launched Project Greenprint to partner the industry in co-developing digital utilities to facilitate the efficient flow of trusted ESG data. This data will support financial institutions and businesses in mobilizing capital towards sustainable projects, monitoring their climate and sustainability-related commitments, and measuring the impact associated with these investments. Under Project Greenprint, MES and the Singapore Exchange piloted a digital ESG disclosure portal last year. Titled ESG Genome, this portal allows SGX-listed companies to report baseline ESG matrix in a structured and efficient manner, and for investors to access the data in a comparable and consistent format. Over the past year, more than 180 listed companies have been onboarded onto ESG Genome, with over 40% of them starting to populate their data. On average, these listed companies have filled in 60 ESG matrix, with some populating up to 300 matrix. Moving forward, MES will be scaling Project Greenprint to support national-level reporting needs, including reporting by SMEs and private companies, as well as defining baseline matrix to streamline SME reporting across multiple sustainability reporting frameworks and methodologies. On sustainability-related disclosures, MES welcomes the publication of the International Sustainability Standards Board's disclosure standards, which will serve as a comprehensive global disclosure standard for corporate sustainability reporting. In Singapore, listed companies in 5 prioritized industries are already required to provide full TCFD-aligned disclosures this year, and all other listed companies will also have to do so on a comply or explain basis. MES is working with other government agencies to chart a coordinated whole-of-government approach on strengthening and phasing in sustainability disclosure requirements. Through Singapore's Sustainability Reporting Advisory Committee, SRAC, government agencies will work closely with the private sector to develop a sustainability reporting roadmap for Singapore incorporated companies, including financial institutions and other non-listed companies. In a recently concluded public consultation, the SRAC has recommended, among others, to align climate-related disclosures to ISSB sustainability disclosure standards and to mandate climate-related disclosures for non-listed companies of annual revenue more than Singapore 1 billion from financial year 2027. These are significant steps towards promoting sustainability and mitigating climate-related risks across the whole economy. On transition planning, the process of transition planning is a crucial means for insurers to aid their own transition efforts and those of their customers and investee companies towards a low-carbon future. In this regard, MES issued a consultation paper on our transition planning guidelines, TPG, last month. The TPG built on MES's existing environmental risk supervisory guidance and focused on insurers' internal strategic planning and risk management processes so that they can better prepare for the risks and potential changes in business models associated with the transition towards net zero. In conclusion, while significant progress has been made in understanding and managing climate-related risks, there's still much work to be done. The urgency of the issue requires the insurance sector, including supervisors, to continue studying climate risks, improving our capabilities in identifying, assessing, and measuring these risks, and exploring new and innovative ways to mitigate them. The industry also continues to have a role to play in climate adaptation, working with the public sector to find solutions to serve our communities in the face of climate change. Conferences like C4I help draw out the key questions and issues, while providing a safe space for the insurance industry, supervisors, public sector leaders, and academics to debate and find collective solutions. Thank you very much, and I wish all of you a most fruitful conference ahead.
Good morning, and welcome to the opening panel discussion of the 2023 Connecticut Conference on Climate Change and Insurance. This morning's session is titled Bridging Disciplines to Address the Challenges of Climate Risk, a roundtable discussion. I'm Frank Tomasello, Executive Director of the Institute's Griffith Foundation, and it's my pleasure to serve as moderator of this nonpartisan and non-advocative session, which is certain to be enlightening and inspiring. Joining me in discussion are three learned professionals: Lori Wing-Heyer, Director of the Division of Insurance for Alaska. There, she oversees and enforces the division's mission, which is to regulate the insurance industry to protect Alaskan consumers. Charles Nice, the Dr. William T. Holt Associate Professor of Risk Management and Insurance at Florida State University and Department Chair of the Risk Management and Insurance, Real Estate, and Legal Studies Department in the College of Business. Please note that Dr. Nice's comments reflect his opinions based on his 30-plus years of research on natural disasters and insurance, and do not necessarily represent the views of the state of Florida or Florida State University. And also with us, Mr. Christopher McDaniel, the president of the Catastrophe Resiliency Council, a nonprofit organization whose mission is to collaborate with risk and insurance-focused parties to create a healthy, competitive risk marketplace that promotes resilience against natural catastrophes. The Catastrophe Resiliency Council is an affiliate of the Institutes and a sister organization to the Griffith Foundation. Biographical information on all conference speakers can be found on the C4I website. Panelists, thank you for coming together to share your insights and expertise. Before we begin our conversation, let me also express our gratitude to Connecticut Insurance Commissioner Andrew Mais and his team for inviting us to take part in the 2023 C4I conference. In the 45 minutes ahead, I look forward to exploring the interrelationship of innovation, research, and regulation in managing the existential threats of climate risk. But to begin our conversation, panelists, I'm interested in your perspectives on the current climate risk landscape. Christopher, would you care to kick things off there and share your views with us?
Absolutely, and thank you for having me. It's interesting from an industry standpoint because there is so much pressure on the different industry organizations out there to do something about climate change, and it's a challenge that most risk and insurance organizations deal with on a daily basis. They're constantly being asked questions. There's concerns, obviously, by everybody in regard to climate risk, and to that end, everybody's kind of scrambling, if you will, to try to come up with what is the long-term plan, what is it that we're trying to do. So I would say, from an industry's perspective around climate risk, we're still very much in the early days of determining what the impacts are going to be, what the challenges are going to be, and what needs to be done to address those. But I am happy to say there's lots of activity, both from a industry and a government regulatory standpoint, and there's lots of initiatives to work together to define the problem properly, and then also to come up with solutions to ensure that we at least have a safety net. We can't do anything about the weather, but from an industry standpoint, but we can at least ensure that we're there to provide a safety net for everyone.
Thank you, Christopher. Director, I'm curious, care to add any color sort of through the regulatory lens? How do you see the threat landscape today in terms of climate risk?
No, I think Christopher has spoken very well on it. I think there's a certain amount of fear on the availability of insurance products that regulators are dealing with, as well as solvency of insurers as we go forward. But I think there is hope amongst all of us as we work together and come to the conclusion that climate change is real. It's not going away anytime soon. So we need to work together, academics, researchers, the industry, regulators, federal, local, and state governments, to address how the insurance industry will still be there in the next 5 or 10 years.
Thank you, Director. Chuck, your thoughts?
Yeah, absolutely. I want to take just a step back for a second. And when we talk about the idea of climate change, I think one of the biggest things we think about from the academic perspective is, what is the exposure And our exposures have changed over the last 30, 40, 50 years. So even without any kind of climate input at all, using Florida as an example, our population rate has been growing double the rate of the US population since 1992. So the amount of exposure in these areas where we worry about climate related losses, whether it's windstorm or hail, convective storms, wildfire, our exposures have grown exponentially in those areas, even before we start to layer on some of this uncertainty that we're seeing with climate. So from an academic perspective, we're still just getting a handle on how we think climate change is going to affect things like windstorm or wildfire. And the technology we have to predict those types of things, these single peril models like windstorm models or wildfire models, while they've been around for 20 years, they're still relatively new. So to think that we can reach some level of accuracy with these that for insurance purposes is very difficult. I think we have a very good general idea. We have a fairly good handle on some of these things like wildfire or hurricanes, but we don't have the level of accuracy yet that I think people are looking for, consumers are looking for, and insurers are looking for to accurately price these types of things moving forward.
Could I interject something there, Frank?
Please, Christopher, please.
Yeah, it's interesting that you say that. I had a very good conversations with one of the large insurance brokers the other day about this very subject, and the comment was, which I thought was very apropos, was we're pretty good at predicting short term and what our exposure is now and that kind of thing, but the challenge is what we don't know is being able to predict into the future. 10 years, 20 years, that kind of thing. I mean, it's a big blind spot for us. So there needs to be a lot of work in that space, and there is a lot of work that is starting to occur in that space to address that blind spot. Because if you don't know where you're going, how do you know how to get there?
Director, any additional color you care to add there?
No, I think that's, when I talked a little bit earlier about there's a certain amount of fear, and I think it's fear of where are we going and how accurate are the models. And as Charles said, the models are good. There's been a lot of progress made, but we still become caught off guard, such as you were talking about the population and the increased exposure in certain areas where we've certainly seen population growth. Texas, Southeast for the storms, somewhat in California for the wildfires. It's a concern.
We've talked a bit, or the topic of models has come up here a bit during our opening discussion. I'd like to explore that in a few minutes with you, along with other opportunities to innovate, to grapple with the challenges before us. Before I do, perhaps, Chuck, we could call upon you to maybe help some folks in our audience to think a little bit about the role and perhaps the limitations of traditional risk transfer. Where does that fit here within this puzzle of climate risk and grappling with that uncertainty?
Sure. I mean, when you think historically about what insurance companies bring to the table, we always talk about this concept of the ideally insurable risk, having a lot of exposures that are independent of one another, and they're kind of they're similar to one another, and to some extent we can pool them together, and we can use the non-losses of the many to offset the losses of the few. And from that perspective, insurance is really a social good. It actually helps remove risk from society. It works for things like auto, and it worked for homeowners for a long time until we started getting these more events where there's a lot of correlation between the exposures. So storms that affect a large portion of an area, even tornadoes to a certain extent used to be very much regional. That region has expanded greatly. Flood is a great example too, even though that's not something that's typically privately insured. It's another area that affects a large portion of the population at the same time. And when you start to violate some of those underlying rules of insurance, you start to wonder, like, what is the value that insurance brings to the table? So you worry about the correlations, and you worry about these events that can affect a large portion. The second thing I think insurance, and we talked about this, insurance companies have really done a very good job of lately, is this risk identification. They help to price the risk that exists. And I think insurance companies are actually really good at this. They don't tell people you shouldn't do something or you should do something. They kind of come up with a price of, if this is what you're choosing, this is the price of the risk that you face. And that's where the models come in. And you know, the historic looking back over losses from the last 10 or 20 years and using that to predict what's going to happen next year, that model doesn't work very well for these events that we're talking about. So these companies have developed these very forward-looking models, and they take into account, you know, basically all the exposure that's out there. They model the exposure. They modeled, and for storms, they model the oceanography. They model the wind engineering. They have engineers putting together loss projections. They know something about the wind fields, and they can put together these simulations that come up with pricing. And to what we were talking about, the uncertainty level, these models come up with some pretty good aggregate levels. They can tell us a good idea about what the average annual loss is going to be in an area, but they're not very good yet. And maybe they'll get there, but they're not very good yet at saying something like, well, Frank, your house is going to cost $1,572.32 this year. That per exposure pricing, there's still a lot of volatility in that. And as insurance companies develop this, as they become clear, these models become better, and I think they will become better, I think we'll get to more accurate pricing. But that gets to the point that both Christopher and our director brought up here is, you know, we want short-term prices. We want a price for the next year, and we're trying to price what really is amount to long-term trends with changes that are going on, and that's a very difficult process to undertake.
And the flip side of that, if I can add, is the pricing. We're finding some products, homeowners in Florida, I'm sure you've seen it, we're pricing people out.
Right.
Because the accuracy of the pricing for the risk, based on the model and based on history, we know that we are seeing huge rate increases if there's even insurance available. Yes. To protect the consumer. And that's equally a concern. I absolutely agree with you that the pricing needs to reflect the risk, but at some point that pricing becomes so prohibitive for the consumer, be it small commercial or homeowners, that we've created this perfect storm, if you will, to protect the consumers again.
Absolutely. And, you know, another piece that I think is important to mention, you know, in this stream of thought is, you know, the post-catastrophe feedback. You know, no matter how well we are at making models, there's always going to be variables that we didn't take into account. So it's extremely important not only to have, you know, great exposure databases out there and that kind of thing, but it's important to have that feedback loop so that every time there is some kind of catastrophe, we're updating what we're doing, we're getting better, we're honing, we're, you know, constantly doing that. I think that's a big factor that, you know, that needs to be taken into account, and, you know, needs to be a formal process, not just something that, you know, is done by an individual company, but, you know, that we look at across the board.
Thank you. So what I'm hearing, I think, from the three of you is this notion of perhaps the ecosystem coming together to grapple with significant challenges of affordability, availability, challenges of a heavily regulated industry here, right? And a framework, a construct from a regulatory perspective that perhaps may create a bit of challenges when we think about innovation happening very rapidly. Is that a fair assessment? And how important is it for all folks to kind of come together to begin to think through opportunities to wrestle with the climate risk before us?
I'd like to jump in on that, Frank. I mean, I think when we talk about availability and affordability, I mean, this is clearly, it is a huge issue in Florida, but it's not the only place. I read a New York Times article the other day that showed that even the states that with the lowest insurance rate increases are still double-digit percentage rate increases over the last year. And it has to do with cost of construction, it has to do with inflation, has to do with a variety of other factors, including changes in loss exposures, changes in predictions about what's going to happen going forward. This is one of those areas, you know, we talk about the individual pieces The whole can do more than the individual pieces can do. I think insurance companies are very good at pricing risk. What I don't think they're good at is incentivizing people. Everybody looks to the insurance industry and says, well, fix the problem. You're charging me more. How do I fix it? And I'm not sure that's something that the insurance industry on its own can do. I mean, the way pricing works, sure, we incentivize mitigation by offering discounts on properties that are mitigated against whatever the most common risk in that area is. But that doesn't mean that the insurance industry is the one out there really pushing mitigation 101, trying to get consumers to harden their homes against these types of events. That's something that you need the political willpower to do. That has to be involved in the real estate industry. I always refer to it as the HGTV problem of, should I harden my home or should I put in granite countertops? And HGTV tells me that granite countertops are going to add to the bottom line of my house. And it's really hard to incentivize these types of things. And going forward, those types of incentives need to be there to really change the direction in which we're moving.
It's interesting that you say that. NIBS just recently put out a white paper around this very topic of how do you get in front of this, predict and prevent is what we like to call it at the institutes. But how do you get in front of the problem and stop the problem, but before it occurs? And their white paper that they put out is centered around what kind of certifications need to be put in place for like plumbers. If you've got a basement, you need to have a sump pump and it has to meet these requirements and all this kind of stuff to get ahead of some of these risks, before the catastrophe occurs. So it's a very interesting topic. It's a topic I think that probably doesn't get enough exposure, but it really should, to use a bad word. It doesn't get enough exposure, but it probably should get more attention, because I think the future of risk is going to be, stopping it before it occurs, not addressing it after, the horse is already out of the barn.
I absolutely agree with that. And I think that, the insurance industry or the insurers, excuse me, certainly have their stakeholder in this. I think we all agree on that. I think they're a big stakeholder in this. But I think a lot of this, we've got to go back to local planning, state governments, and certainly the federal government, and having a role of where we build and how we build. And if it's incentives from a local basis, like Alabama's doing in their program, Oregon's got a program, California's kicking off a program, we've got to recognize those efforts to solve this problem. So I think a lot of this that, as we talk about what the insurance company's role is also what's the role of going back to your community to promote these home hardening programs, but also looking at, as you were talking about, Christopher, what plumber certification, what kind of building certifications, where are we planning? What is the zoning community? What are they doing to make sure that some of these catastrophic losses are minimized to the degree we can?
Exactly.
Folks, I'm curious to build upon what you just shared, Director. What role, or how do you foresee the role of academia here as well? We've talked about notions of sophisticated modeling and innovation there. We've talked about matters of resilience and their importance. Where does the academy fit here? Curious to get your thoughts on that.
Academia can play a huge role in this and helping us get the consumers and the naysayers to believe that climate change is real and is having an impact on the insurance industry as well as other industries. There is still an amount of pushback in certain communities with certain individuals that what happens in Florida would be of a consequence in North Dakota. And yet I think we all need to come to the recognition that what happens in Florida does impact us across the U.S. Insurance companies are not going to design products state by state. They're going to design them to go across the U.S. from Florida to Alaska to Hawaii to New York. And we're all going to have to come to terms with what's going to happen in the insurance industry due to these trends because of climate change. And I think academia could play a huge part in helping us educate regulators, insurance companies, industry as a whole as we go forward.
Thank you, Director. Appreciate your thoughts. Chuck, Christopher, we welcome your input as well.
Yeah, I would like to jump in on that. I think what academia has done so far has been on the modeling side has been very good. I mean, they've brought together a variety of different fields to kind of address a specific problem. What I don't think academia has done very good up to this point is address the financing part. So they've helped out, I think, quite a bit on the and I'm going to say the real scientists. I'm an economist, so the real scientists have helped out on the modeling part. I think this is our opportunity to kind of jump in here on how do we pay for these events. I mean, they're not getting smaller, they're not getting cheaper. So how do we approach this going forward? And what is the role of the private market? What is the role of regulation? What do we need a public-private partnership to think about some of these larger events that are occurring? I think we can look, and what we've seen is a very ad hoc response to this. You have states, I want to pick on the state of Florida. We're heavily involved in property insurance at the primary level with citizens. We're heavily involved with reinsurance. The federal government down here, they've done primary insurance through the National Flood Insurance Program. The federal government's got involved in high levels of reinsurance with TRIA on terrorism. It seems like a very ad hoc response. There's no consistent, organized, level it out plan of how we're going to address these things and who's going to address at certain points. I think we need to leverage some of the skills and abilities that these different entities bring to the table. I personally don't think the government's really good at individual level risk assessment. So they probably shouldn't be involved in the primary layer of insurance. But they are really good at financing large scale events. And that's something that private companies are not good at. So I think we need to think about what the insurers are doing, what their role is, where reinsurance should be involved, and where the government needs to be involved. And everybody has a seat at that table to make these kind of discussions worthwhile.
Yeah, you bring up the point of citizens insurance in Florida. I think that's a great example of kind of a public-private relationship that's been created, obviously for the state of Florida, to help bring that safety net to bear. I've often thought that, in the face of climate risk, something similar to that, another public-private type of organization, but one that's nationwide to provide that kind of safety net, in the face of climate risk might be something that makes sense down the road. I don't think we're there yet. I think that there's a lot of foundational type work that has to happen before you can get to that point. But that might be, something that makes sense down the road.
I agree with your comments on reinsurers in particular. So I just wanted to jump in. In the past, these types of losses, the convective storms, the huge fires, they often rarely touched reinsurers to the degree they are now. So we didn't see the reinsurers coming to the table to negotiate for their treaties with quite the, I don't want to say attitude, but they're as scared as the primary insurers are as to where this goes in the next 5 or 10 years or beyond. So I think we're seeing them more involved in these discussions than we have in the past, because typically reinsurers didn't have the losses that they are taking as much as the primary insurers are right now.
I love to jump in on that comment too there, because I think part of that is that nothing has occurred in a vacuum. And when we've seen in areas of Florida where we've had a number of storms, there has been a market response, and the large, well-known insurance companies have retreated from the exposure that they have. And those are the ones that could afford to handle the big losses without tapping into high layers of reinsurance. And this gets back to that availability issue. When these large, well-known insurers begin to retreat from certain marketplaces, and we've seen it in Florida, we're seeing it in California, the insurers that fill that need, that fill that gap, they tend to be smaller. They tend to rely on reinsurance a lot more. And that is pulling the reinsurers down into working layers that they probably weren't involved in earlier years. And that, those losses, once they hit the reinsurance market, what we've seen over the last few years is how high those reinsurance rates have gotten because of the losses that reinsurers have suffered. And again, that price volatility now gets trickled down to consumers, which they weren't seeing before.
Absolutely. Absolutely agree with that.
Yeah, I agree as well, and would echo that as well. And a case in point for the Catastrophe Resiliency Council, our chair and co-chair, our co-chair is a major carrier, and our chair is actually a reinsurer. So,
Thank you, folks. I want to shift gears a little bit here and ask, what, if anything, can be learned from the international community when we think about innovation and resilience here to kind of grapple with the threats that we face? I'm curious to get your feedback on that.
I'll jump in and start the conversation here. I think we're in all of this together. I don't know that the international community is any more ahead of us or behind us on this as we watch the impact of climate change across the globe. I think that we're learning from each other how to keep products available to consumers, how to keep them affordable. I think some of the newer products, the parametric products, some of the higher retentions, community-based insurance, things that are coming out, we're all sharing the knowledge that we're learning as we go through this. But again, this is current day. This is happening so fast that I think I work with the Sustainable Insurance Forum, and I think collaborating with my colleagues there as well as through the IAIS and other groups, we're all in a learning mode here, and it's a steep curve.
Thank you, Director. Chuck, Christopher, your thoughts?
I'll jump in on two fronts there. First, one thing I always think is that what can you learn from international community? Like, I'll point to Bermuda, and I'll say what we should be learning from Bermuda is how to build houses, because yeah, they can't evacuate when a storm comes. They have built to be able to withstand the events that occur. And anecdotally, I was just over in Destin, Florida a couple of weeks ago giving a presentation, and as I'm walking down the beach, I am watching them build on a beachfront house on a cement slab with wood construction. And I'm like, so we're not raised in the air. Now, granted, we are beachfront. It was above the water level, probably by the minimum requirements. But I'm like, you're building wood frame on a cement slab, and that house is going to be there for the next 50 years. We're just creating more future problems. So I think number one, we need to learn is how to build better. That resiliency part, that to be able to have sustainable communities that can bounce back after the fact. The second component that the director brought up there is the financing component of it. Yeah, I always think about this. The goal is to get to capital markets, right? That when we have $100 billion or $200 billion storm, we think that's a huge loss to the insurance industry. But 100 billion, 200 billion, that's a couple minutes of volatility in a capital market. So how do you take this type of specific risk, industry specific risk, and securitize it in a way that we can make markets help with this? And you think about credit card debt and mortgage backed securities. How can we get insurance-linked securities? How can we get those markets to work better and to be more efficient in the transfer of risk? And I'm all for that, but there is one caveat on that, and that those markets, the prices are market determined, and they do change through time. And that's something people are going to have to understand, that the cost of capital associated with these risks is not a consistent level. It does vary quite a lot.
Very true. I'll jump on my soapbox for a second on one thing from a European standpoint. And in not just European, but globally, outside of the U.S., flood insurance is not a separate item. It's something that's incorporated with everything else. And in the U.S., it's a constant challenge to get people to get flood insurance and to justify why they need it and that kind of thing. And a big part of the problem is because we make it a completely separate entity. If it was something the way they do it in the rest of the world, where it's integrated with the rest of the perils that you're covered for, it would go a long way toward getting better coverage from the flood standpoint. It's just an uphill battle that is very hard to justify, and that's why your house on the beach there probably doesn't have flood coverage automatically built in.
Yeah, flood insurance is I'm going to guess here. This is just me picking a number. Probably 95% of it is purchased because the mortgage company says you're in a flood zone and you have to buy insurance, even
Right.
though you can, with relative simplicity, look at where you live and see what your surrounding areas are and think, yes, there's a potential for flood. We see it in Alaska, for instance, of communities flooding every year that are on a river because of when the ice comes out. You know, when the snow melts and the ice comes down, we have a flood. These people know this, and yet we know, when the governor's office calls me on these and says, "Is there, will they have insurance?" And I'm like, "No, I'm willing to bet they don't, because we just know what the take-up rates are." And there's so many communities where people only buy flood insurance because their mortgage company says you have to have it. And if they were a little bit more selective on making people buy it, because there is a risk, regardless of what the flood map says, I agree with you. It would be better for communities, better for consumers. I feel the same way about earthquake and some of the other catastrophic perils that mortgage companies and others, just if they don't require it, they don't buy it.
Right.
Yeah, I think that's a big issue. I mean, but this also gets back to that availability and affordability issue. Like, to me, this is low-hanging fruit. This should be, get the consumer out of the wind versus water argument, make it part of the homeowner's policy, make the National Flood Insurance Program a reinsurer and then the consumer's out of the discussion. You know, down here in the Southeast, you know, when you come back, you evacuate because of a storm, and you come back, and all that's left is a cement slab, and then you got to argue whether it was wind or water. You know, it shouldn't matter. Let that happen on the back end. But the problem that we mentioned earlier is when you do this, and this is something that Citizens is beginning January 2024. If you are a Citizens policyholder in the state of Florida, they are requiring flood coverage. Whether you're in a floodplain or not, they're going to want you to have, and they're going to enforce it. But that adds to the cost. And you know, that's why there was a study that came out. I think it was First Street just came out with a study talking about drops in their predicted drops in property values because of climate change and because of these increased insurance requirements in Florida. And they're expecting huge property value drops in Florida. And again, then we get back to what happens now. What happens to growth? What happens to the economy? All that kind of fun stuff. Are we seeing, and First Street refers to it as a housing bubble. Are we seeing another housing bubble, especially in these cat-prone areas?
Yeah, if I could add to that, your comment, it's well taken. And I think what it shows is something we've discussed here, is the local communities, the state, federal government getting involved. And certainly Florida standing up and saying you have to buy flood insurance is one example of a state saying we have got to change the way we've done business.
Yeah, that's very promising.
A follow-up question along those lines: what opportunities, if any, do you see, sort of through this lens of educating consumers? And is there a gap there? And are there opportunities to perhaps increase education or pursue consumer education in a bit of a different way? Has anyone
yes,
wrestled with
and
that?
yes. I was in Memphis a couple of weeks ago and had the opportunity to speak with the Emergency Managers Association, and much like the insurance commissioners, these were the emergency managers from across the United States. And what we were talking about on the panel was being able to educate consumers. And one of the examples I gave, and I'm sure Charles and Christopher can talk about it, is there is so much data on the internet. I gave the example of division websites. We all put a ton of data up there to look at flood insurance, to look at, making sure you're not uninsured, look at perils where you live. But getting consumers to the links to really research on their own, instead of just having an insurance broker, and this is not a dig at insurance brokers, but an insurance broker say, here's a policy, this is a standard homeowner's policy, you're going to be fine. And really doing a risk assessment with the consumer doing their own risk assessment, and looking again at where they live and what has happened there in the last 20 years. What insurance should they be buying to protect themselves? And frankly, then there is going to come a cost element of, can I afford everything I need? But there's ways to help that. Take a higher deductible, really insure for the catastrophic loss, as opposed to, I lost a window type loss.
Yeah, absolutely. Because some kind of a consumer dashboard where they can get in there and got sliders back and forth where they can, raise or lower their deductible and see the impact and what their coverage is and all that kind of stuff. It's something that's a universal dashboard is something that's definitely missing.
Yeah. I think one of the biggest barriers to this is consumer education. I've been teaching risk management and insurance now for more than 30 years. And the simple fact of the matter is it is a complex issue that we don't have a 30-second pitch to make people understand. And the more complex it gets with catastrophes, the less people are interested in trying to develop their understanding of it. And in most cases, when people are going to, especially with choosing a location to live, they're not looking at how often hurricanes happen. They're not looking how often wildfires happen. That is so far down the list of priorities for location. They're looking at the amenities that are offered. They're looking at job opportunities. They're looking at a variety of other things. And one of the last decisions is how much is insurance going to be in that area. And that needs to move up the priority list. And maybe it's something where they start looking at differential mortgage rates in some of these areas. Higher risk areas have higher cost, and we have to be able to communicate that to the consumer earlier in the decision process if we're going to try and really make some headway on them understanding the risks that are involved.
And I think to add to that, we need to work with, as you were talking about, some of the mortgage companies and such, because I think we could really quickly, we're getting there where homeowners, we all say, oh, well, with the mortgage rates, who can afford to buy a home right now? Well, with the insurance rates. And if the mortgage rates came down, some of these areas, people aren't going to be able to afford the insurance.
Right.
And there's a correlation there that what you were talking about. Yeah, it's sunny all the time. I'm getting a good job offer. Let's move. We're going to be closer to family. Never considered that the house they just signed for, that the insurance is going to be $6,000-$7,000 a year.
Yeah.
And all of a sudden, that's a big burden.
Mm-hmm.
So panelists, I'm curious, are there any jurisdictions within the U.S. or for that matter abroad who've done anything that's novel in the way of educating consumers? And are there any jurisdictions gaining any traction or momentum in a positive way here?
I could talk about it a little bit. There are some areas where they've done some work on educating consumers on these issues, not as much as needs to be done. There was, and I'm going to pick an anecdotal example there. Here in Florida, they used to put up, this is years ago, this is before I moved here, this was in the late 90s. They used to put up signs about, when a storm occurred, how high the water level had been. And here's a sign that shows the water level during this storm was this high. And the realtors were wanting them down because people didn't want to buy in those areas when they saw how high the water levels were. So there have been anecdotal evidence of these types of educational opportunities, but I haven't seen across the board where anyone has really been very good at educating on location-specific risks prior to entry to those areas. It goes against what those areas want. I mean, they want growth. Right. I mean, they want people to want to be there. They want people to live there. That, our whole economy is based on growth, and it's hard to come up with a good economic model of how you can develop in a certain area if people don't want to be there.
I would just add to that. I think we can do a whole lot better as a regulator. I mean, certainly the insurance industry is putting dollars towards education and letting consumers know, and the industry itself is. But as a regulator, some states are doing a much better job. I will say the regulator in Alaska, we do a pretty crummy job. We put stuff on our website. Occasionally we run ads like you're talking about to say this, you should think of this. But we need to get more involved in the community. We need to get out and actually talk to people if they want to hear us or not, that this is coming or this is happening. And they need to help us looking again at home hardening and the things we can do to be more supportive so that we have an insurance industry in the future.
Thank you, Director. Christopher, any thoughts from your window there?
Yeah, I think that I definitely think that we need to have more of that kind of consumer education out there. I know that through one of our affiliates at the Institute C4I, we do a lot of communication outwardly. But it's not just a matter of creating the communication; it's getting people to actually look at it and reading it, and having an incentive to go out to this website and take a look at that. So it's not just a matter of build it and they will come. You have to build it and figure out how to promote it properly too, to get the people to come.
Yeah, insurance as a whole, it's not sexy, it's not fun. There's not a win or a lose at the end, and everybody can, toast to one another. It's just, it's hard to get people. And frankly, this is across the insurance board. It doesn't matter if it's healthcare insurance or if it's auto insurance or if it's property insurance. It's
Right.
hard to get people interested.
I mean, I agree. That's the number one thing, individual insurance companies are very good at marketing themselves. The industry as a whole has not been very good at forming its message. And it's always the big bad insurance companies are always, we have a large personal injury law firm here in Florida that, is always bashing the industry, and the industry does nothing to do anything about it. And I think that's one of the issues. People view insurance as a cost. It's not a benefit to me. It's not a good product. It's just a cost to me. And why would I worry about it's just another bill, just like my electric bill? I'm not going to worry about it. I think that until we can change people's perspectives, we're going to have this issue going forward.
Thank you, panelists. We are rapidly approaching our 45 minutes time of conclusion. So let me pose a final question for your reaction here. I'm curious, individually, as you sit there, do you see the climate risk glass as half empty, or is it half full? And if you look ahead 2 or 3 years, how do you see things evolving? So a compound question for the three of you. I'm not sure who would like to jump in and tackle that one first.
Sure, I'll jump in first, and I would say that the right now the glass is starting to be filled up. I wouldn't necessarily classify it as half empty, but we've got a long way to go. I think we're just now starting to bring academia, regulatory, government, industry together to focus jointly on this. For too long, we've tried to attack this in silos, and it's essential if we want to see that glass to be continue to fill up, that we all work together. I mean, we can't do it. No organization, no entity can do it alone.
I agree wholeheartedly. I think that I know we started talking about getting people more an understanding about how this is going to affect things moving forward, climate change, but I think we've actually made great strides over the last 20 or 30 years in addressing this. This is a long-term problem, and it's going to take a long-term solution to fix. And my view on it is always the glass is half full, because we actually have time now to focus on long-term problems. We're not putting out daily fires in the industry that we can't focus on something like this. So I'm going to take the glass is half full approach. But having said that, there is still a ton of work to do.
Thank you, Chuck. Director, your thoughts?
I'm going to go with the glass is half full, because I think that it's certainly becoming discussed in more circles and more circles, where I think we used to be pretty siloed when we talked about climate change and the impact. I think that there's more discussions, not just at and I don't want to use the primary level, but at the primary level of property insurance. That's where we saw the greatest impact. Now we're seeing it as insurance companies again, and I'll just make an example here of Alaska. We're an oil and gas state. Insurance is becoming harder to find because insurers are saying, well, if we're going to go to zero carbon emissions and such, we've got to look at how we're insuring certain industries. It's not just on existing oil and gas, but green technology. We're starting to see a change of it being addressed throughout the industry. So I think there's hope. But as both Christopher and Charles have said, there's a lot of work ahead of us. I think that my biggest fear on this, quite honestly, is that consumers will get tired of hearing it. And so I think we need to figure out how to communicate to them. I mean, who's not tired of hearing about COVID? And so consequently, I think we're becoming a little bit more lax in our protections or how we are working to keep people healthy. And I'm concerned that with climate change, our communication needs to be that we can't fix it today, But we do need to work on it so that we do have sustainable housing, a sustainable economy, and certainly a sustainable insurance industry.
This has been an enlightening roundtable discussion. Our time is drawn to a close. Many thanks to you, our panelists. Lori Winghire, Director of the Division of Insurance for Alaska, Dr. Charles Nice, the Associate Professor of Risk Management and Insurance and the Department Chair of RMI, Real Estate, and the Legal Studies Department at Florida State University's College of Business, and Mr. Christopher McDaniel, the President of the Catastrophe Resiliency Council. It's been great to have you here. We appreciate you sharing your insights and expertise with us. Also, a special thanks to Connecticut Insurance Commissioner Andrew Mais and his team for inviting us to be part of this conference. I'm Frank Tomasello of the Institute's Griffith Foundation, inviting you to stay with C4I as the 2023 programming continues.
Hello, I'm Lieutenant Governor Susan Weissowitz, and I want to thank Commissioner Andrew Mais and the Connecticut Insurance Department for hosting the Connecticut Conference on Climate Change and Insurance. This is a wonderful opportunity to have a conversation about the very real and present consequences of climate change and how the state of Connecticut is working to address these issues. It's also an opportunity to prepare the private sector on how these challenges will affect the market as well as our communities. Connecticut's geographical location makes it front and center in the climate change conversation, as nearly half of the state is on the Atlantic coast. In more recent years, we have been confronted with the stark reality that we can no longer afford to ignore the devastating effects of climate change. We've witnessed these effects through tropical storms and hurricanes that threaten our coastal communities, bringing with them severe flooding and property damage. The impact of these storms remains etched in our collective memories. Since the beginning of 2023 in Connecticut, weather extremes have reached from one end of the spectrum to the other. We've experienced torrential rains causing the Connecticut River to flood and heat waves with temperatures well above 90 degrees. Torrential rainfall in July resulted in devastating flooding to many farms in our state, leaving several farmers to deal with huge crop losses and potential revenue losses due to the flooding along the river. By 2050, Connecticut is projected to experience stronger storms, longer, more frequent droughts, up to 20 inches of sea level rise along the coast, and increasing frequency of coastal flooding with levels like those seen in Superstorm Sandy every 5 to 10 years. But there's good news. We have the capacity to make a difference. That's why Governor Lamont and I have committed to making a cleaner and healthier Connecticut for our residents now and for future generations to come. This year, Governor Lamont announced $8.8 million in state funding to support 21 innovative climate resilience plans and projects across 17 Connecticut towns. This funding will support comprehensive climate resilience planning at the regional, municipal, and neighborhood level. Now more than ever, we need to strengthen our infrastructure and coastal defenses to better protect our communities from the rising sea levels and extreme weather events. We must continue to support policies and initiatives that prioritize climate resilience. Our investments in response to climate change means cleaner air and water for our communities. Thank you for all of your commitment to making a brighter and more sustainable future by attending today. We really appreciate your help and support. Thank you so much.
Welcome, everyone. We are here at the third annual Connecticut Conference on Climate Change and Insurance. My name is Brian Garcia. I'm President and CEO of the Connecticut Green Bank, and will be helping moderate today's panel on empowering communities with state grants for resilience. We have a great panel assembled for you here today. I'm going to ask them in a second to introduce themselves and to talk about the research projects that they're working on. But first, I wanted to set some context for this panel. All of the states that we're going to be hearing from today have been provided with support from the Robert Wood Johnson Foundation. This is one of the largest foundations in America focused on health equity. It uses policy, grants, and impact investment towards the goal of every American having the opportunity to live the healthiest life possible. They are specifically working with the National Association of Insurance Commissioners and providing grant funding to the Center for Insurance Policy and research there, and are directly supporting projects in the states that we're going to be talking to here today to examine barriers keeping insurers from bringing their best capital to community development, how climate change solutions will make communities more resilient and healthier. And we're going to hear from our panelists here in a second on how they're using their research dollars to advance how they're addressing their communities and making them more resilient to the impacts of climate change here in a second. The focus of the Robert Wood Johnson Foundation, their goal is to match insurance company capital with these opportunities that we're talking about to drive increased investment flows for purposes such as affordable housing, economic development, and climate resilience. What are all the different tools that a foundation like the Robert Wood Johnson Foundation can use from grants, investments, support for policies to advance resilience in our most vulnerable communities? So with that as the context, I'm going to ask each of our panelists to introduce themselves, talk about their organizations, their roles, and tell us a little bit about why climate change, public health, and insurance are important to them. So Vince, why don't you give us an introduction of yourself, your organization, and tell us why climate change, public health, and insurance are important to you.
My name is Vince Blymel. I'm the Assistant Commissioner for Communications and Outreach at the Colorado Division of Insurance. Climate change is something that we are very interested in. It's impacting us here in Colorado and the western states. Wildfires are not new to this area, but what we are seeing is they are increasing in frequency and in strength and in the time of year that they happen. We used to have a wildfire season, and now it seems to be year-round. It's concerning. It's going to have an impact, obviously, on homeowners insurance, commercial property insurance, things of those nature. That's why we care. But as its impact to public health is also a concern to us. And so it's one of the reasons that we have been very interested in this, in the grant and our work with our partners at the Colorado Health Institute to really figure out how is climate change and these impacts to the world of insurance impacting the health of Coloradans, which impacts, again, not just their homeowners insurance, not just their property insurance, but is going to also impact health insurance down the road. And with that, I'll let my other panelist, Ann Roberson, introduce herself.
Hi, thank you, Vince. I'm Ann Roberson, and I'm the manager of the SC Safe Home Mitigation Grant Program located within the South Carolina Department of Insurance. The program was started in 2007, and it was really created as a result of the issues that we saw following Hurricane Katrina and those series of storms that really impacted the southern states. We saw issues regarding availability and affordability of insurance for homeowners throughout our state and other states as well. So our General Assembly passed legislation and created the SC Safe Home program. And since that point in time, we've awarded over 8,000 grants to homeowners in our coastal regions to help them strengthen and fortify their homes, primarily focusing on roof retrofits and opening protection, all again, wind-based for the most part. And we have awarded more than $34 million in assistance to homeowners. We have, over the last several years, seen homeowners kind of step back a little bit just because I think they cannot afford their piece of the of the retrofit. And I think there are a lot of reasons for that. We are seeing some areas that seem to be more stressed than others. And when I say stressed, I mean stressed both financially and from personal standpoint and from climate change and issues. They're seeing more flash flooding. We're seeing more impacts from strong winds and those sorts of things. So we are very interested in trying to learn why this is, what can we do to help. And as our mission is to try to make our coastal areas more resilient, this is a paramount issue for us in trying to reach that goal.
Thank you, Anne. Thank you for that introduction. Let's turn it over to Thomas to tell us about what's happening in Louisiana.
I'm Tom Travis. I'm Deputy Commissioner at the Louisiana Department of Insurance for Policy, Innovation, and Research. And I'm also the director of the Louisiana Fortified Homes Program, which is a grant program similar to what Alabama has to help people put on fortified roofs on single-family homes. Of course, our target audience in this project is to help underserved people, with resilient construction, making their homes more survivable, if you will, during hurricanes or named storms, other adverse weather events. And of course, the public health is probably, getting into this, public health is a secondary concern or issue, but it's a very real one because the adverse effects on public health affect things like our ability to recover from a named storm or hurricane, and the ability of the workforce to get back to work and to bring everybody back online and to bring us back to normal. And of course, from the insurance perspective, our department is responsible for regulating insurance. We regulate the rates of insurance. So we're also a consumer protection agency. We're trying to help people with their insurance costs. Of course, your average household doesn't have a professional risk manager. And so part of what we're doing in this program is really a type of loss prevention and trying to help them survive and maintain their homes and make it more insurable.
All right. Thank you, Thomas. Thank you for that introduction. Let's turn it back to Brian to hear what's happening in Alabama.
I'm Brian Powell with the Alabama Department of Insurance. I serve as the Deputy Commissioner and also the Director of a new operation here, the Office of Risk and Resilience. In response to your question, I think it's all interrelated. Changing climate presents a fundamental threat to human health. Human health can be directly affected by the availability and affordability of insurance. And I think that insurance is directly affected by changes in the climate. I think that there are negative impacts of this interrelationship creates adverse effects on things like workforce and infrastructure. The more frequent and severe weather events are, the more negative impact we experience between these relationships. Change in climate is also degrading, I think, to many of our social determinants for, like, say, good health, such as ability to work, in some instances, equality, and access to health care to our most vulnerable populations. I like to take into consideration climate stressors that affect, like, let's say, the lifespan of disease. Temperature, precipitation, both play a role in increasing the disease that directly affect the health and insurance.
All right. Thank you, Brian. Thank you for that introduction to what's happening to strengthen Alabama homes. Karam, why don't you end us up here with your introduction of what's happening in Colorado?
Sure. So my name is Karam Ahmad. I'm a director at the Colorado Health Institute. I direct our Acclimate Colorado body of work, which is our work that is centered on the intersection of climate change and health and communities, and really making sure that we are supporting communities in their ability to adapt and be resilient and live happy, healthy lives in the face of a warming climate here in Colorado. Our organization, Colorado Health Institute, we've been around for over 20 years now. We're a nonprofit, nonpartisan research and consulting group and convening group. We do a lot of convening of different government agencies and partners across health, across environment, across all sorts of facets that impact the health and well-being of Coloradans. Why climate change, public health, and insurance are important to me and important to CHI. So we know climate change, it's happening now. It's impacting the health and well-being of Coloradans and folks across the country already, and some more than others. And it's those populations, those some more than others, that we really are concerned about and are really thinking about what are the best ways that we can come up with solutions to protect them. Insurance is one of many levers. We know that the insurance industry in general has been thinking about the impacts of climate change for decades. In many ways, we're on the vanguard in terms of thinking through how to prepare for climate change. And the intersection of insurance, it's very important to us here in Colorado. We had the Marshall Fire. I'm sure Vince here from Colorado also shared a bit about the Marshall Fire here in Colorado, which was the most destructive wildfire in Colorado history, burned over 1,000 homes and caused a lot of irreparable damage in a community in a matter of hours, and in a community that was, you would think, is not the typical wildfire prone community. So why this matters is because insurance is one of the levers that can be used to protect the property and in doing so the health and well-being of communities. And in our work, we're coordinating with the Division of Insurance here in Colorado to really think through what do wildfires really look like in Colorado? How do we contextualize it so this isn't an issue where people think it's happening in the mountains. It just happens out in nature, and it's not going to impact people. Wildfires have impacted all 64 counties in our country since the early 1990s. So it's touched every speck of the state in one way or another. So coordinating with the Division of Insurance and coordinating with other state agencies, local public health systems, academia, it's going to be a very sort of cross-sector effort that's going to be necessary to protect the health and well-being of communities, and insurance plays a key part in that.
All right. Well, thank you all for those introductions. So why don't we start off with the Robert Wood Johnson Foundation research. So all of your states and all of the efforts that you're currently working on have received research funding from the foundation. So tell us a little bit about that research. Who's your target audience? What do you want to learn from them? Give us a little bit more about what you're working on. Vince, you want to start us off?
Sure, thanks. So we are working with the Colorado Health Institute on a program to study the effects of climate change and its impact on the health of Coloradans, and what we can do to hopefully make things better, especially for vulnerable populations, to lessen those negative health impacts. It's been challenging, but yeah, I'm glad we are working with the Colorado Health Institute, because one of the keys, I think, in working with a group like them is being familiar with their work and working with a well-respected organization. And here in Colorado, they are very well respected with the work they do that has traditionally always been focused on healthcare, health insurance, and how the people of Colorado are doing. This was, I think, a different creature for them. They came to us needing to learn more about property insurance, homeowners insurance, which wasn't their space. We talked a lot about homeowners insurance, about wildfires, about mitigation, about the secondary impacts of wildfires, smoke damage to homes, and things of that nature. But it's been good for us because in the Division of Insurance, we tend to look at the world of insurance in a very insurance sort of way. And very often in a very sort of binary way of, okay, here's the world of health and life insurance, and here's property and casualty insurance. Of course, we know that wildfires impact people's health. But actually connecting those dots is something that we hadn't done or hadn't necessarily thought about. We tend to think about things in terms of the insurance plans, the homeowners plans, the health insurance plans, what's covered, what isn't, claims, those sort of things. But not putting those dots together was putting those dots together was something we hadn't really done. So this work is really focused on that. And the team at CHI has been great. They learned very quickly all of the ins and outs of property insurance and all of the things that it meant and the impacts of that. I'd say one of the big drivers for them as well in terms of undertaking this project was the Marshall Fire back in December 2021. This was a large fire in Boulder County that really took place over the course of about 24 hours and did extensive damage to a couple of communities there with nearly 1,000 homes lost. It's been a wake-up call for much of the state, not just in terms of insurance, but in terms of community planning, community resilience, rebuilding efforts, and then the long-term impacts to people's physical health, to their mental health, to their financial well-being, to the health of those communities, losing their tax base, losing the people that live there, and all of the challenges going on with that. And it's one of the things that clearly this was something that was brought on by climate change. This was December 30th, 2021. We had already been in cold weather season, October, November, almost all of December, without any snow in the Denver, Boulder area, without any rain. And so the area was just dry. And the other real, I think, shocking thing about this fire in particular was it took place in a suburban community. This wasn't in the pine forest in the Colorado mountains, which unfortunate as those wildfires are, tend to be regular occurrences. They often they'll burn. They won't cause any damage to homes or minimal damage. This was something that just swept through a community with the green space areas that people appreciate in those areas, just going up in minutes and in hours and engulfing the community. So that's been a game changer for us here in Colorado. It's changed the way we've been thinking about insurance, homeowners insurance, the impact to people. It's been a game changer for the people of the state and for the organizations looking at this. I think our target audience, when we think of this report, and it's a very detailed report. Initial drafts are looking great. They really try and figure out the different areas of the state and point out that so many of the areas are under some risk of wildfire. And I would say that in the larger sense, our target audience has been or is going to be almost all homeowners and people in Colorado, anybody impacted by these fires, really. But I think the immediate target audience is going to be the decision makers, the policy makers, legislators, key stakeholders, to figure out what can be done and what are the next steps. And I think one of the real positives in working with an organization like CHI is that they are thinking beyond just this report and thinking what those next steps are. They want to drive policy discussions to improve the lives and the health of Coloradans, which is something we are completely aligned with them on. And so I think that's something that is going to be key in terms of driving those policy discussions. I think that also highlights what we're hoping to learn from this is I think it helps to quantify the information. I think a lot of the information is not necessarily going to be surprising that comes out of the report. Putting it all together is going to be useful, but I think it's that next step of what are the discussions, what are the policy decisions, policy discussions that come next that we can hopefully drive to make things better for folks. That's really where we're hoping a lot of bang for the buck comes.
So thank you for that, Vince. Obviously the dry conditions there in Colorado present really unique factors. You know, the idea that we're looking at suburban fires in Colorado is just kind of unfathomable. So why don't we build the bridge from you as an insurance regulator to the public health perspective, and why don't we bring in Karam here to bring in his perspective on the Colorado Health Institute with respect to the research. So Karam, what do you think in terms of the target audience for this research, and what do you want to learn from them?
Yeah, so I think first and foremost, like our target audience, there's a couple bins, right? There are folks that are working in the insurance industry, right? There are folks that are working really in the division of insurance and the state agencies that are involved in all things related to insurance, policymakers that are working in coordination with the division of insurance to put forth legislation and put forth potential programs, policies, budgets that can be used towards protecting the health and well-being of Coloradans from wildfires. I would say those are sort of key audiences. Of course, other audiences that are important are homeowners, are the renters, are local government officials. This is wildfires and just climate change in general. It is a global issue with very localized risk, and the work cannot be done without coordination with local government officials, community-based organizations that are doing a lot of the work on the ground. And then, like I said, insurance providers and officials and the policymakers that work hand in hand with them. I think actually the next phase of our work. So we just finished our first phase of our work, which was really analytical. We were trying to really understand what is the landscape of sort of wildfires and how they impact some of the more sensitive or vulnerable populations or at-risk populations in Colorado. And we're about to release a report that explains that and tells a story of 5 different communities across the state of Colorado and how wildfires can look different depending on where you put a dot on the map in our state. But this next phase of our work is really getting at exactly what your question is. So it is involved in sort of engaging with community partners, engaging with homeowners, with renters, with local government officials, and with folks that are representative of the insurance industry as well, to really understand we're trying to understand what is the nexus of need from community in terms of what are the things that they need to ensure that they are protected and don't have protection gaps in their insurance needs. And then also realistically, what can insurance providers provide as products, as solutions, as education, as outreach, without going insolvent, right? Like there's this fine balance of towing or of tiptoeing between that, and threading that needle is really what we're trying to at least start to understand and help convene and put some thoughts together for all of those groups that are impacted.
Thank you for that. You know, it's really interesting hearing about the circumstances that Colorado finds itself in with regards to dry conditions. The idea that, or the notion that we would be seeing suburban fires in Colorado is just unfathomable. Why don't we switch gears here and turn to Ann? Ann, I've had the opportunity of learning a little bit more about the South Carolina Safe Home Program. Excited to hear you talk about it. Tell us about your target audience and what do you want to learn from them with respect to this research?
Sure. Well, I will say we seem to be dealing with a lot of water, a little bit different from what Vince might have been dealing with there. But we have had a slower uptake in our coastal regions of both flood insurance and homeowners insurance. And as I referenced earlier, we have seen a little bit of a slowdown in our grant uptake as far as homeowners in some of those more vulnerable populations. We really want to know why and what's the reasoning behind that. So we have had the opportunity to partner with our South Carolina Office of Resilience and apply for the Robert Wood Johnson funding and receive it. The title of our grant project is Root Causes of Protection Gaps in Homeowners and Flood Insurance Coverage among the Vulnerable Residents Living in the PD and Santee Watersheds. And I will tell you, if anyone's familiar with South Carolina, the PD and Santee Watersheds are just off of Myrtle Beach, Georgetown, coastal areas. And we get water from the coast, obviously, but we also get whatever comes down from North Carolina. So when North Carolina gets severe storms, we will likely get the flooding, and residual effects. May not be immediate, but it will come. And unfortunately, a lot of those homeowners in those areas are suffering. They have been hit repeatedly, beginning as far back as 2015. Some of them still have not recovered from the 1,000-year flood that we had in 2015. So we're wanting to know obviously there are impacts. So we're wanting to know more about those impacts. What health concerns are we seeing? People living in situations that have not been repaired for several years. I'm sure they have mold. What else do they have? How what kind of impacts have they had to deal with, and are they still dealing with? So we're working with the Coastal Carolina University and the RISE Center there, and a strong team of local residents and community leaders to get out and really speak to these homeowners and residents in the areas to find out more. We've got a survey that we started. It's about 33 questions. Sounds pretty extensive, and it is. It asks all sorts of things. What kind of home are you presently in? How long have you had damage, or do you have damage? Do you have a flood insurance policy? Do you have a homeowner's? If you don't, what would it take to get one? All of those sorts of questions, just to try to get a better sense of what's going on there in those areas. As far as our target audience for this report, once it's complete, I tend to agree with Vince. I think it's going to be policymakers, obviously homeowners. One of the questions we're hearing a lot is that they think they have a good understanding of insurance and what it does, but they still have a lot of questions, and they don't understand what the deductible is. So, I mean, that's kind of a marker there to say that maybe we need to get in there and do some more education and outreach, awareness, not just to make them understand and see what we can do to try to help them. Going forward, I think it's going to take probably some out of the box kind of thinking. How are we going to help some of these more vulnerable populations be able to have the coverages that they need to get them to the point where they can be more resilient? In a perfect world, I'd love to see every one of those homes mitigated and resilient and ready to go, and all of them to have homeowners and flood insurance. That's a pretty big wish, but it's something that we're working toward, and I really hope that we can get closer to that goal.
So that was an important point that you just raised there, Anne, at the end. I want to put this back out there to you in terms of how we think about resilience. Is it enough to have homeowners insurance, flood insurance? Is that enough? Or are we asking people in our homes to take action today, to take advantage of the administered through the South Carolina Safe Homes program? How do you think about resilience in that context? What is enough?
Well, I really think it's going to require a multi-pronged approach to this. We've all got stake in this. It's not just the grant. The grant is obviously going to help. It's when it was first created, this grant program was seen as seed money to help build a mitigation message for the homeowner. There is an inspection report that goes into great detail about what needs to be done to make their home completely, or stronger and more safe, that they get to keep as a part of the grant program. So we're hoping that they will want to go ahead and take additional steps. Once they get the grant, then they'll work towards something else. But in order to get to that point, I think there is a responsibility there on the homeowner to understand and appreciate what it is we're trying to do. It's just not a free roof program. And that's part of what we do with the Safe Home program, is the awareness and making them understand the importance of why we're doing this. I think it's important also for the homeowner to be prepared. And when I say prepared, I don't just mean having that go kit. I mean, they've really got to understand their insurance policies. They need to understand what it is that they have, what's covered, what's not covered. You know, so many people do not have emergency funds in place to be able to help. We have a catastrophe savings account option here in the state that allows people to set money aside for their deductible. We also have state income tax credits to allow them to save on their income tax if they fortify and mitigate their home to safe home standards. So all of these pieces play into this. But I think at the root of all of it is the importance of that homeowner understanding what it's going to take to make them be able to be to that point and get to that point. And it's, you know, I think it involves a financial awareness and a literacy component. At least I think it does here in our state. And I don't think I'm really speaking out for, you know, I think it's probably true in other states as well. So we're hoping to learn more from these surveys as to what is it that they value and how can we make that, you know, something that equals to what they need to have as far as the coverages and the resilience piece as well.
Thank you for that, Ann. So why don't we take that and move from the water issues that climate is posing in South Carolina and move to fire in Colorado. Vince, what's your perspective here? Same question.
Yeah, well, one, I think Ann is absolutely right that it's about insurance literacy. So much of what we deal with when as regulators here at the Division of Insurance is about insurance literacy, understanding what it is, what the terminology is, what's covered, what isn't covered. One of the lessons coming out of the Marshall Fire back in December 2021 was how many people had or how many people were underinsured. And I think you know, some of that is going to be down to how are the policies sold to them? How did insurance agents represent policies to these people? But I think there's an idea, especially with homeowners insurance, that it's something you just set it and forget it. It's unlike health insurance. Health insurance, we have open enrollment come around every year. Whether you're in the individual market or you have an employer-based plan, you're getting information about that, you know, starting at the end of the year saying, hey, it's time to change. That renewal notice for your homeowner's insurance, even for your auto insurance, comes in via an email or a letter, and it might sit in your inbox, sit at the end of your desk for a while, you open it. It's not too bad, you just let it go forward, but you don't dig into the details. And so I think there's, like Ann said, there is some level of responsibility for people to be familiar with their policy, know what's in there, know what's covered, what's not covered, and to do it at a time when things are relatively calm. In the midst of a disaster or even after a disaster is not the time to start figuring out that you don't have the insurance that you thought you did and that you aren't going to have enough to build your home, which is what many folks here in that fire discovered is they were underinsured to some extent. And so I think it's something that we're hoping can drive the discussion. But I think something else you asked, Van, is insurance enough? Is homeowners insurance enough? It's a vital piece. But things like home hardening, I think that's an excellent approach. It's something we want to take a look at the programs in other states. Wildfire mitigation is something that many of the homeowners insurance companies selling here in Colorado are requiring of homeowners who live in the mountains or in what is called the wildland urban interface, or WUI. So kind of the foothills of Colorado. But I think it's just going to become more prevalent. And it's something that, going beyond homeowners insurance, it's something that speaks to the resilience of communities. It's more than homeowners insurance that needs to build back these communities. When something happens that is disastrous on a large scale to a community, they lose infrastructure. As I said earlier, they're going to lose the tax base of their homeowners, of the commercial interests in the community. And so these are things that that need to be thought about, need to be looked at, and need to be addressed. And these issues being driven by climate change, like wildfires, are causing the homeowners insurance companies to, let's say, reevaluate their approach to it. We're not only seeing it here, we're seeing it in many places around the country where they're starting to, let's say, be more careful with their underwriting, be more selective in where they write policies. Here in Colorado, just coming out of that fire, one legislative approach that was passed is the introduction of a FAIR plan, an insurer of last resort. We hope to have that up and have plans available in early 2025. We don't necessarily have an availability problem now, but we want to get that going in case we do, because we are hearing, that insurance companies are, again, being a little more careful about what they're doing. We want to take a look at the impact of all of this on reconstruction costs, because that's something that, again, in light of this, that disaster was something that a lot of people didn't know about, and it was hard to gauge. So those are things we want to take a look at as well.
Insurance is one of the pieces of the puzzle, right? It is one lever. It is one factor that can contribute to the resilience of a family's ability to, in the face of a wildfire or a flood or whatever natural disaster may occur. Insurance is something that can help them rebuild and recover, right? And that's important in terms of resilience. But again, it is one factor. A person or a family or an individual's sort of ability to be resilient also has to factor in sort of the local community's resilience, right? Does the local community have the resources to provide in the event of a natural disaster? Do they have the resources to provide to support that community, whether they're economic resources or food, social factors that influence people's health, temporary housing, things like that? Insurance is one piece of that, and it helps in the sort of especially in the recovery and post natural disaster factor. And we know that insurance providers are trying to be more proactive as well in providing education and resources related to prevention. Here in Colorado, again, we're focused on wildfires, so a lot of that is geared towards like wildfire proofing your home and doing things like that to take those steps. But insurance is one important key factor in terms of resilience, but it is really ensuring that communities, individuals, families have the social factors they need to sort of protect their health and to be resilient. And that's a discussion beyond even just climate change in general. That's work that we also work on at CHI, is making sure that people are connected to the resources that allow them to live happy, healthy lives. So that can be healthcare, can be food, can be housing, can be access to good paying jobs. All those sorts of things are really at the heart of it. That's how you ensure a community, a family, or individual are resilient to natural disasters. So I would say I would caution binary thinking, not either or thinking. I would say the sort of spectrum of climate adaptation and resilience, right, is from prevention to recovery and the sort of after effects of recovery. Insurance is really a factor that can play a role throughout that spectrum, but is mostly thought of in recovery. And communities obviously should be doing as much as they can to act to prevent. If you're living in a wildfire prone area, for example, wildproof your home. It's statistically shown to protect your property. And then insurance on the other end can be used as a protective factor. So depending on where you are contextually, it's that balance of action versus insurance, I think, will take place. And it's important to factor that in and not really think of it as one way or the other.
Well, thank you for that. All right, so let's turn to Alabama. Brian, why don't you tell us about the Strengthen Alabama Homes program, specifically as we think about the research, who is your target audience and what do you want to learn from them?
Well, thinking about a target market or our target market, which are residents of communities of color in Alabama, they are perhaps some of the most economically challenged citizens that we have. It's not enough to have insurance. Insurance is typically a family's first line of economic recovery after a disaster. Depending on the amount and type of insurance, the loss may surpass coverage in many ways. I think that helping families understand the role that insurance plays in their life and how to make better decisions about lifestyle and exposure to risk has a direct tie to the resilience of the household. All is important, and the trade-off is to have a more informed or educated consumer who can make better decisions, coupled with adequate insurance coverage to create that more resilient household. I don't think that it's enough to have insurance and especially just to prepare them or help prepare them from a looming climate emergency. I think as was mentioned before, that Alabama has a mitigation program called Strengthen Alabama Homes that provides grants to roof homes to the IBHS fortified standard. So having insurance and taking action, let's say in this particular instance where we've fortified a home, I think that's enough to perhaps keep you safe to a certain degree, and then also perhaps get you in a position so that you can financially recover, hopefully faster after the storm. But there are so many other things that go into the term resilience that needs to be considered. Educating people, I think, on how to make better life choices is a much broader scope and bigger picture than just helping them get through the storm. I think that if they are educated and can make better life decisions, that once the storm passes, that even increases the time it decreases the time that it takes to recover in all ways affected after a climate emergency. I think insurance is really preparing you for after the event. Perhaps action can prepare you for the event. In other words, it can do something prior. Just like I mentioned earlier with the Strengthen Alabama Homes program, that action prepares you for a severe weather event to happen. Insurance is part of the recovery process after the storm passes or after you have some type of tragic event. So I think they work hand in hand. They're both important, but I think action is really in the way we're using it here is the way that you can prepare, and then insurance is more of a way for recovery.
All right, thank you for that, Brian. Now let's shift from Alabama to Louisiana. Thomas, why don't you tell us about the Louisiana Fortified Homes program, the research that you're doing through the support of the Robert Wood Johnson Foundation? Who is your target audience, and what do you want to learn from them?
Our target audience is underserved populations in the areas most vulnerable to hurricanes and named storms. Of course, in doing our research for our Robert Wood Johnson grant, Smart Home America identified 5 target communities to focus their efforts, and they were all in South Louisiana, and they were all in densely populated areas where there's a lot of poverty and a lot of underserved communities, concentrations of underserved communities. I think what we would like to learn is what are the barriers to their having insurance. Because we're an insurance-focused agency, of course. Of course, we're in doing this grant program, we're learning some of that. One thing is the cost of, people can't afford the insurance. People can't afford to maintain flood insurance, even with the federally subsidized rates. And just to do things like putting a new roof on the house to make the house more insurable, even with a grant, a lot of people can't come up with $5,000 or $10,000. Even fairly middle-class people are having a hard time coming up with $5,000 or $10,000 to re-roof their homes, even though it's going to benefit them with substantial discounts over the next several years. So I think what we want to know why, or what we can do to help people with those issues. And then also, of course, it's a public health oriented things. We'd like to find out from them what it is that, what are the adverse effects that they have from maybe living in substandard housing or from being affected by named storms. So, when they're forced out of their homes are degraded, the roof's damaged, the house is damaged, they've lost electricity, things like that. Or when you look at resilience, it's not enough to have insurance. That insurance is the risk management of last resort. That they come in and make a payment, but it's a long process and it's a frustrating process. And what do people do in the interim? And it's very difficult for them to rely on emergency assistance, which may also be very slow. It's better to help families prepare for problems like hurricanes or other types of storms or climate-related disasters. It's better to keep them in their homes or get them back in their homes as soon as possible. Studies all show it minimizes the public health adverse effects when they're able to stay in their own homes and they're able to go back to work and get their lives back to normal as soon as possible. And it's particularly most important things like stress, post-traumatic stress, but there's also other health issues. Part of it is people getting injured from cleanup and restoration work. So that's is a cascade of effects that can be cut off by keeping people in their homes by having resilient homes. The major trade-offs, first of all, action requires a commitment up front, and it requires resources, money, people, time, effort, which they may not want to do. As people are oriented towards these things after a major event, but as time goes on, people start to lose interest in maintaining these efforts that are required to do the resilience, to pay the taxes, and to make the other efforts to have a resilient home, a resilient community. Where sometimes, even though it costs money, insurance is easier in some respects because you get to go on with your life and you just write a check into the insurance company every month or quarter or whatever the premium period is. And but regardless, you're going to have to make the effort in one way or the other. And I think it's just a matter of, I think it's better to do the effort, take the action up front. It minimizes all the costs down the road, but it's hard to get people to maintain an interest in those sorts of things.
So now let's talk a little bit about the findings of the research that you're working on. I realize that you all are probably halfway in to your grant cycle, but I assume that you've got some things put into motion and you're starting to find some results, or you're making some observations. Tell us what you expect in terms of the findings from the research. Anne, you want to kick us off?
Sure, I'd be glad to. So we anticipate gathering about 400 responses to these surveys, and right now we're about 220. And we've also had a series of focus groups. I'm happy to say that some of the focus groups have had as many as 27 people attend. I think that's been tremendous, and I really attribute that to the fact that we've had local community leaders out there helping promote it. That brings that interest in. So it's an opportunity for them to get together and really talk and explain what's going on. Some of the people have brought in photographs of damage that they're having, that they have in their homes. So I think the response has been very, very good so far. We will continue to do our focus groups and finish up the surveys. We have sent those out and made them accessible via QR codes and links, and also paper surveys, just whatever we could to try to help, get that response back in. Our preliminary report will be ready hopefully in January, and then we've got to go back and do validations, and that'll be into the spring. So the final report will be obviously in the summer. But what we're seeing already with what the surveys that we have gotten in, that we've looked at preliminarily here, we see there's some culture barriers, truly. And as I said, we know that there's a vulnerable population there. Unfortunately, there's a general skepticism so far that we've seen of government assistance. And what does that mean? I get it. I can understand that, these folks, some of them have said, you know what, we've answered so many questions in so many surveys, please don't ask us anymore. And, hopefully, we're able to talk to those people a little bit more one-on-one and try to help them so that we can dispel some of those thoughts and theories there. But we are seeing a desire for education and awareness of insurance coverages and products and what's out there. So I think that's a great opportunity for us to get in there and try to explain that more. We do see that there is an inability to pay for some of these coverages, and that's what's holding some of them back. And we're also seeing to that health impact, we're seeing that there are just general feelings of stress and anxiety and mental health concerns about mold. All of this related to past events and those that are lying ahead in the future. So and we've actually had several people who were not aware of the Safe Home program show interest in it. So I think we've got a lot of work that we can do going forward. This is just an opportunity for us to really get out there and get to know the folks in those local communities.
So Vince, tell us about what you expect in terms of the findings from your research there in Colorado with the Colorado Health Institute.
I think one of the key things that we're hoping to get out of it, and looking at a draft of the report so far, is the discussion of the impact of wildfires and climate change as a whole across the state. I think, as I said earlier, the wildfires have tended to be focused in, the sort of mountain areas of Colorado. But as we're delving into the topic, and as CHI has dug into the topic, finding that it's a risk that occurs all across the state. So trying to find out what that is and what its health impacts have been. And that's the other thing I think that we're really hoping to get out of this, and that is connecting those ideas of wildfires and the impact on people's health. Like I said, we in the insurance regulatory space tend not to connect those directly. So putting those together is going to be very interesting, and has been interesting in terms of discussion and in the early versions of the report. I think the other thing we're really hoping to get at is what is the impact to Colorado's vulnerable populations, and socioeconomic factors, but also the less economic advantaged areas of the state. What does that mean? Because again, so much of the talk about wildfires and homeowners insurance has been focused on the mountain areas, but what does this mean for the Eastern Plains, the farms down in the southern part of our state? Trying to figure this out. What is the impact, and then not just the impact, but then what are some steps that can be taken to help this? Our timing right now is I think the report is going to be done in the next couple of months, early part of 2024, with an eye on engaging in stakeholder discussions in conjunction with CHI to find out, to put out the results and hear back from the people of Colorado. And I think that's one of the other things that we're really keen on finding out. What is it that they have to say? What is it that they're feeling in terms of their experience these days with the threats coming down from climate change, and how is it impacting their lives? We're undertaking a bit of that kind of in the homeowners insurance space, just within the Division of Insurance, trying to find out what are their concerns now in this world. But I think the discussions that CHI is going to engage in once this report is out, focused on this report, we're very excited to hear what people have to say.
So Karam, anything you want to add to Vince's remarks there?
Yeah, so I mean, what we've already uncovered, I think like I think the first thing that we uncovered was wildfires have impacted all 64 counties in Colorado. I think that was that dispels the sort of myth that wildfires only happen in nature, right? Or only happen in the mountains. I think a key goal of this work is to uncover some of those myths, is to do some storytelling with the data. We've got a lot of the data, and we've contextualized actually sort of what wildfires look like in 5 different communities across Colorado. And we've looked at sort of the landscape risk, we've looked at housing risk, we've looked at social demographic and sort of community resilience risk, and then sort of what is like the wildfire landscape in each of these communities. And we looked at a community that's sort of like high mountain, hard to reach, a community that it's difficult to like have people evacuate. This is in sort of the Estes Park area of Colorado, for example. And sort of the story there shows us that it's an older adult population. There's sort of some of the demographic factors we have to think about. The homes in that community are typically not wildproof. They're older. That puts them more at risk. Whereas we look at another community, for example, on the Eastern Plains, and a lot of people in Colorado wouldn't associate the Eastern Plains with wildfire risk, but these are grasslands. There's really high wind risk. A lot of communities out there, and in fact, 100% of communities out there are at risk of being affected by a wildfire in the next 30 years in one form or another. Most of those areas are in wildland-urban interfaces. Most of those communities on the Eastern Plains are lower income, are not equipped to sort of have the factors that can make them resilient in the face of a natural disaster like a wildfire. So what we've started to uncover, and of course this is like we're sort of peeling the layers of this, but what we've started to uncover and we've put together in this first report is really wildfires look different depending on the community that you're looking at. And sort of the wildfire factors, the socio-demographic factors, the resilience factors for a community, the housing factors are really going to paint and are painting a different picture in each of those communities. That's 2 really quick examples.
Brian, what about Alabama? What do you expect in terms of the findings from the research from the perspectives of Alabama?
We expect to find that the economically challenged citizens who achieved like a basic level of knowledge about insurance, we should see an uptick in their understanding about how to create a more resilient life. This can be measured by seeing better choices made by them, and also by becoming better insured.
Thank you for that. Thomas, from Louisiana's perspective, what do you expect in terms of the findings from the research?
Well, I think one of the things we're going to find is that, as usual, when you do research, that you're probably going to discover something that you didn't expect to find. But I think that generally what we're hoping to discover is to learn, at least from in our study, looking at public health effects from housing-related issues, and how we can mitigate those public health effects through making homes more resilient, making them more insurable, and making people enabling people to stay in their homes or to return to their homes shortly after an adverse event. And we're probably going to learn a lot about the the economic and social barriers to people being able to do that. After some of the major events we've had, sometimes people they're able to go back to their communities and get to work very quickly. With other events like Katrina and Rita, we had large areas of destruction across the entire state. It was sometimes months before people could even get back to their houses to start to work on reconstruction. So I think we'll learn a lot about social factors that affect public health and insurability.
All right, so as we wrap up this great panel, this great conversation, I just want to come back to where we started, which is that the Robert Wood Johnson Foundation really put out resources to support all this different research that you all are doing on climate change, vulnerabilities, insurance, public health in your respective states. Let's say they come back to you after this project. You all have had different successes, great successes on the research. You are putting that research to work in your communities to increase the resilience of your communities. If they asked you what are some ideas for project number 2 in your respective states, what would you say if there were future research that you wanted to pursue? Anne, you want to kick us off?
Sure. Gosh, that would be absolutely wonderful. I would really love to see us partner with other state agencies and organizations throughout the area, state, and region to actually implement an awareness mitigation and resiliency initiative and be able to track it. Try doing it for about a year and a half or so, and have a limited number of people that could be in there, and let's really see what we can do. Make those efforts to bring them on board and align them with the coverages that they need and understand it and get to where they can afford it, and also then mitigate those homes, and let's see what we can do, because I think that would just be a wonderful way to send this message out. It could be a great model for the rest of the state, honestly, and anyone else. So that would be my hope.
Excellent. So monitoring and evaluation following on the project to show that the impact is happening, or to track that impact. That's great. That's a great follow-on research. Brian, what about you in Alabama?
If we were able to receive some additional funding in the state, one of the things I think the Department of Insurance would be extremely interested in understanding is taking into account the mitigation work that we're doing with the Fortified program and the Strengthen Alabama Homes program. What kind of positive health effect is that having? We're able to mitigate homes and keep people in these homes during the storms, make them safer, create better living conditions for them, better economic conditions for them, just through the mitigation piece alone. What is that ripple effect? How does that look when you start talking about health impact of families, especially in maybe low-income communities or communities of color, especially in our most rural areas in Alabama? What does that look like? What can we see from research so that we can take that information and maybe use it in other areas of state government, like such as our Alabama Resilience Council? There are projects that we want to take on there, but we need some background information so we understand what we're faced with.
Thank you for that, Brian. Vince, what about you? Any future research opportunities for you there in Colorado?
Yeah, I don't want to say necessarily I was copying Ann, but I'm thinking that resiliency and mitigation are big things. I think something we'd love to dig into is the safe home or home hardening discussions, projects, to figure out more about those, to learn more about those. But I think there's also a space for what does community resilience look like? I think so much of this gets focused on individual homeowners, individual people. What did you do to, do you have homeowners insurance? What did you do to mitigate your property? And I think back to what somebody told me once when we were talking about mitigation and wildfires is, it's all well and good if I've done it, but if my neighbor hasn't done it, it doesn't matter a whole lot. And I think it's one of those things that needs to be looked at to have a larger discussion about what can communities do to become more resilient in the face of wildfire and these other climate change driven disasters.
Excellent. So community resilience. So let's build from that, Karam, with your public health hat on. What would be additional areas of research that you'd like to work on with Vince?
Yeah. So I think this was a really, like, this phase of the work was a really good first step in us really assessing what wildfire risk looks like in Colorado. Of course, we have a lot of climate scientists in Colorado. I'm sure we have like the most per capita in the country that are looking at wildfire risk and the impact on communities. I think where it would be really helpful in a next step is not just taking the findings of understanding risk, the intersection of community, social factors, and the influence on health. And then, I mean, our next phase of our work is sort of talking to the communities, talking to the stakeholders in terms of what they would like to see in terms of solutions. I think another phase of this work can really be to dive into the sort of health impacts and really like localizing what it means to come up with solutions for communities here in Colorado. Like I said, wildfires are a risk that can and have impacted the entire state of Colorado in many different ways. I think a next step for this work is to really dive a little deeper into sort of those social factors. We often call them the social determinants of health. That's the term that Robert Wood Johnson uses. And really, like, is there a better way that we can kind of start to uncover that intersection of health and kind of the intersection of insurance as a lever to protect those communities? We've started to do that in this process this year. And I think, I mean, if you were to really ask me the kinds of data that we would love to see, it's more claims data from hospitals, for example, would allow us to really understand what are the health outcomes in communities from all of these natural disasters, and how do we sort of map that out with sort of insurance gaps in our state as well. There are so many factors that can be sort of assessed. So yeah, I think there are a lot of opportunities for further research in the intersection, especially of health and insurance and local community health outcomes.
All right, thanks for that. So let's wrap up with Thomas in Louisiana. Thomas, if you were looking at future areas of research and the Robert Wood Johnson Foundation came back to you and said, great job here, what would you be wanting to look at for future research?
I think that right now we're still trying to learn what it is we don't know. I guess, the known unknowns and the unknown unknowns. I think, though, that if they were interested in funding more research, that we would certainly want to find how we can affect people's decision making. What are the buttons to push to make people take action? Whether the nudges, the social influences. How do you get people to make the correct decisions? How do you get people to maintain their homes and to upgrade them? How do you get people to prepare for events? Because it's not just having the home that's in good shape. You also have to be prepared to sustain yourself for 3 to 5 days after an event. A lot of people don't evacuate because they don't have the money to go anywhere. I think we should look at ways that we can influence the whole spectrum of resilience, and find ways. Of course, they're public health oriented. How does that affect public health, and what are the public health benefits that we get from that in order to justify those efforts?
Why don't we thank our panelists for being with us here this afternoon at the 3rd Annual Connecticut Conference on Climate Change and Insurance. This was the session on empowering communities with state grants for resilience. And we heard quite a bit in terms of how a foundation can provide support to states to conduct a variety of research. I mean, we heard a lot of different uses of the Robert Wood Johnson Foundation Fund grants to our various state leaders working through these different issues. So want to thank Kimberly and the foundation for their support of not only these states, but also the state of Connecticut. We also were a recipient of one of these grants to support a project that we're implementing here in Connecticut called Climate Smart Technologies and Home Medical Devices for Affordable Housing. So we are also looking at how to improve the resilience of our vulnerable communities to the impacts of climate, but specifically through a technology lens. What kind of technologies can we help deploy to make them more resilient when the power is out, to make sure that they are in comfortable temperatures when the weather is out of whack. But want to thank all of you for being with us here today. Thank all of our panelists. Good luck with turning that research into practical and pragmatic results to increase the resilience of our communities. And again, thank you to the Robert Wood Johnson Foundation for your support. Thank you all for being with us here today at this panel.
My name is Katie Dykes. I'm the commissioner at the Connecticut Department of Energy and Environmental Protection. And I'm so pleased to be part of this groundbreaking conference. I want to just say how much I appreciate the leadership of Governor Lamont and my colleague, Commissioner Andy Mais, who've been terrific on helping us address the impacts of climate change and proving out models that can help enhance resilience, not just here in Connecticut, but hopefully can be a template for other communities and states to follow. We have been very busy at our department. We are a department that includes both energy and environment and natural resource management in our mission. And as part of that, we have been very focused on a holistic approach to climate resilience. We recently launched DEEP's Climate Resilience Fund as another example of empowering communities with grants from the state to help municipalities and councils of governments, which are collections of municipalities, to be able to undertake the kind of planning and design work necessary to conceive of those community scale resilience projects that are in desperate demand across our state. We continue to see the firsthand impacts of climate change on our communities and residents from this year, from wildfire smoke impacting us from the north, from Canada, to torrential rain that's damaged our roads, swollen our rivers, flooded basements, and impacted businesses across the state. These extreme precipitation events are becoming even more frequent, and they're a real opportunity for us to work together across the insurance industry and state governments to help address chronic flooding, which we know is a significant issue for the insurance industry and for coverage for businesses and homeowners. Thank you to Commissioner Mais. He's been part of the Governor's Council on Climate Change, where we looked at innovative approaches to financing these types of property level resilience investments. We're looking at everything that we can do, from enhancing building codes to even possibly supporting grants for homeowners and business owners to make upgrades to their properties to help them better withstand some of these impacts like flooding. Through our Climate Resilience Fund in 2022, we awarded nearly $9 million to 13 resilience projects and to support 8 resilience plans that will be developed across our state. 93% of this funding is going to environmental justice communities and other vulnerable communities, which is something I'm personally really proud of. We are doing everything from helping communities in Hartford that have long-standing challenges of combined sewer systems to address undersized infrastructure that was never designed to withstand these types of storms. And we're also investing hundreds of millions of dollars in bond funds through the Clean Water Fund, but also in other innovative funding streams to help support green infrastructure that can be employed by communities and businesses to keep as much water out of this combined sewer system as possible. Connecticut municipalities have an important role to play given their local control over zoning and development, building codes. And they also have the opportunity now to create stormwater authorities, another important tool for helping address climate change impacts. As part of a roundtable this summer with travelers in the Hartford, we heard insurers highlighting the critical importance of making sure we're not putting more development in harm's way, especially in floodplains as our sea levels rise and there are more severe storms. This is really important for us to keep in mind, especially as communities across the state are working towards another really important goal of our administration, which is to expand access to affordable housing. We want to make sure that our housing opportunities are both affordable and resilient to our changing climate. In addition to all of this activity, of course, we're working hard towards securing federal funding to help our communities become more resilient to climate change. Through the bipartisan infrastructure law and the Inflation Reduction Act, our congressional delegations have delivered on significant amounts of resources that will help better protect our communities. DEEP has been applying for and receiving climate planning grants from EPA and other federal funders, but we're particularly excited about how our climate resilience grants that we're providing to municipalities and councils of governments will enable them to be more competitive in pursuing the big federal dollars that are available to subsidize both gray and green infrastructure through the FEMA BRIC program and other resources. And I'm very proud about how DEEP is serving as a partner to municipalities to help facilitate their access to those federal funds. Finally, I'll just say we cannot outrun climate change. We're working hard to adapt and become more resilient to it, to be better prepared for it. But we know that the most important thing we all can do is to work together to aggressively drive down greenhouse gas emissions as a state and as a nation. And we want the insurance industry to be our partner in that work. We know how important that is to make sure that investments are driving towards those types of technologies and businesses that are helping bring climate solutions that can reduce emissions as quickly as possible. And so I really appreciate the opportunity to be part of today's discussion and look forward to further partnership in ways that we can work together towards climate mitigation and resilience. Thank you.
Good day, viewers. My name is Dennis Burke. I am the Vice President of the Reinsurance Association of America. I will be your moderator today for what I hope and expect will be a robust and candid discussion on climate, the energy transition, and the role of insurance. I'm joined today by a panel of experts who I will very briefly introduce. Greater details are in their bios on the Connecticut website. In alphabetical order and by title, we'll introduce the insurance commissioners first. Minnesota Insurance Commissioner Grace Arnold, who is in charge of the Department of Commerce, which includes insurance. North Dakota Insurance Commissioner John Gottfried, who is also the current NAIC Vice President. Washington Commissioner Mike Kreidler, who has been very active in climate and climate disclosure issues during his long tenure with the NAIC. Samantha Danowski, who is the State Director for the Connecticut chapter of the Sierra Club, and John Huff, who is the President of the Association of Bermuda Insurers and Reinsurers and a former NAIC member and president. So in light of the time constraints for such a broad topic, why don't we try to frame the issue and then jump into some more details. So Samantha, why don't you give us, the Sierra Club view about climate change and energy transition, and as just a brief framing statement.
Yeah, I would love to. Thank you so much, Dennis, and to the Connecticut Department of Insurance for the opportunity to join this conversation. As Dennis said, I'm Sam Danowski, the State Director of Sierra Club's Connecticut chapter. Sierra Club is the nation's oldest and largest environmental organization. We work to advance climate solutions and ensure that everyone has access to clean air, clean water, and a healthy environment. And as I'm sure everyone knows, we're just seeing increasingly the devastating impacts of climate change. In 2023, wide swaths of our nation experienced heat like never seen before, dangerous heat waves here in the Northeast. We saw damaging flooding and continue to see it. We experienced poor air quality from wildfires. Ocean temperatures are off the charts. The list goes on. What we've known for decades is what is causing climate change, and that is human caused by burning fossil fuels. We also have known for a very long time what the solutions are, and that is to stop burning fossil fuels and transition to clean and renewable technologies. And right now, those technologies are readily available to be deployed and help solve this crisis. But there's obstacles in the way. There's inaction, there's the fossil fuel interests that want to keep profiting off of their product. Well, we got to get over these obstacles. We have until 2030. That's approximately 2,250 days to vastly reduce greenhouse gases to avoid the worst of this crisis. And where insurers come to play here is that insurers first are faced with, they're on the hook for the damages from climate change. But they're also some of the biggest supporters of the fossil fuel industry. They invest their dollars into fossil fuel interests, hundreds of billions by last accounting, and they also underwrite fossil fuel companies and projects. And a big problem we see right now is insurers are backing out of areas that have experienced climate disaster, but they're not backing out of fossil fuels as readily. They really need to play their part.
Okay.
And we want to make sure that they...
We're going to get back to all of an opportunity to talk about all of those things. But I want to give some of our other panelists an opportunity to present their framing statements before we jump right into things. So Commissioner Arnold, can you share with us your views about the current and likely future energy mix?
Sure. So thanks to Commissioner Mais and the department for putting together this panel. I'm really grateful to be here. So one of the things that's unique about the Department of Commerce in Minnesota is among insurance regulators is that we have oversight over portions of our energy system. So one of the things that we're seeing a lot of, and we anticipate to see more of, is a transition from fossil-based energy generation to renewable energy generation. And that looks like a couple of different things. So, you know, wind and solar are much more prevalent now than you've seen before. And then there are other technologies like hydrogen. There's advanced nuclear is something that gets discussion. There's some of these other technologies that are showing some promise as, potential in particular ways to have generation when the wind isn't blowing or the sun isn't shining. So that's one way that the energy sector is changing. The other way is that it's much more spread out than it was, than it has been over time. So, 30 years ago, you had 5 or 6 coal or natural gas or nuclear plants in a state or in an area, and those would be generating most of the electricity or for that area. Now you see wind assets all across particularly plains areas. You see big solar arrays, and though there are more of those and they're much more geographically spread out, that is also requiring a lot more transmission, a lot more lines to get to them, and a lot different kinds of lines to make sure that we can do that. So, it's not just that the kind of resources we're using to create our energy are changing. The landscape of what that looks like is changing as well. And both of those matter when we are thinking about the ways that we'll insure these assets in the future.
So Commissioner Kreidler, we've heard from the Sierra Club and Commissioner Arnold. What do you see as the role of green energy resources currently and in the foreseeable future? And this is a transition panel, so if there are transition issues you want to mention, please feel free.
Thank you, Dennis, and thank you for moderating this, and thank you to the C4I conference in Connecticut here, and we do a similar event out in the state of Washington, just to let people be aware of that, and it's one where we've been doing it on an annual basis, our climate summit, and it's clearly one where we'd like to encourage all departments to essentially follow that same lead. I'd like to address climate change. We need a transition to as quickly as possible. I think Samantha outlined that very well. In a world where there is no carbon emissions, or at least we brought it back to historic pre-industrial levels, we will also probably need to remove some of the carbon that we've already put into the atmosphere, starting with the Industrial Revolution. This is a massive effort, but it will be done largely with existing technology that is already known to the insurer market. For example, in Washington State, almost 85% of electricity comes from renewable energy, 62% hydro, 13% wind and solar, and 9% nuclear. On a windy day, there are states like Iowa where 50% of the electricity is generated with wind. There's already insurance for all of these. And it's all private market except for nuclear, where you do have the invention of the Price-Anderson Act of 1957, which provides coverage for nuclear. Washington is the fourth highest number of registered electric vehicles. We don't hear companies from these with these vehicles complaining about their insurance, I can assure you. Granted, as a nation, we have a long ways to go. According to the U.S. Energy Information Administration in 1922, only 13% of the nation's primary energy consumed came from renewable, 36% from petroleum, 33% from natural gas, 10% from coal, and 8% from nuclear. The discussion today may touch on the practices of taking carbon from the atmosphere and storing it in the ground. Here again, this practice is a mature technology that has been around since the 1970s. Marsh, Chubb, Liberty Mutual, Allianz, and I'm sure there's others that have stepped forward and would be prepared to offer and advertise currently carbon capture storage. Green hydro may be one day also a big part of the solution to the costs of drawing down carbon in the atmosphere. Green hydro is produced through the electrolysis process of water and electricity, but if the electricity comes from a green source, you separate out and you have hydrogen and you have oxygen as the only byproducts. In fact, in Washington recently, we were chosen by the federal government for a major infusion of capital to create a green hydro industrial hub here in the United States, here in the state of Washington. Here again, the technology is mature, and insurers should be well positioned to ensure this process at scale. So it's not one of having to reinvent insurance coverage. It's there, it's available, it's just us stepping up to it. Technology to achieve a carbon neutral world, and the insurance industry knows how to insure it. The problem is is that we will come up. We've come a long way, but we've got a long way yet to go. It's important that we avoid the enemy that we all face, which is inertia. Well, let's get going. Let's solve this problem.
Well, thank you. Commissioner Gottfried, you have a different perspective coming from North Dakota. Can we have your comments about, the current grid and the grid infrastructure and your views about the transition?
Yeah, sure. So thanks, Dennis, and thanks to the C4I for the invitation. I am probably may have a different viewpoint than some of the other panelists on here, and I think that's okay. That's a good for discussion and probably makes good for viewership. I'm John Gottfried. I'm North Dakota Insurance Commissioner. I come from an energy producing state, and so we've got a very unique mix of lignite, oil and gas reserves. We have wind. We have hydro. We have a good strong mix of energy production. And some of the discussions that we've had around our state is, again, we've been issued, our governor issued a carbon neutrality by 2030 goal to set forward, which is a little bit of a surprise, I think, coming from a state like North Dakota, who is a very much an energy exporter and has been traditionally in that lignite, coal, and as well as oil and gas. And I think so. The broad discussion of what all this is and where does the insurance sector fit into it, I think, is one that's gaining more steam. And I think my viewpoint on it is more along the lines of, I'm not sure myself as an insurance regulator should be an energy regulator or a climate regulator. We certainly are facing the impacts of climate change and are dealing with that even here in our state of North Dakota. But it's looking at the affordability and availability across all sectors and what that means, and where this touches, Dennis, and your question on the transmission and the grid reliability. I think there's a comment made that this technology is readily available and you're ready to deploy, and I'll take a little bit of an objection to that. I don't think we're quite as readily available to deploy that energy to our complex transmission grid as we'd like to think. We've got battery storage technology issues. We've got, how do we handle extreme temperatures? We get both hot and cold here in North Dakota. And so it's managing that transition to whatever the next energy source is, I think, is critically important. We're going to need more energy in this country and this world going forward. And we've got to figure out a way to handle that. And that includes, how do we manage that base load requirement that we need? I mean, Commissioner Kreidler mentioned that there's a massive uptick in demand in electronic vehicles in Washington. Similar here in North Dakota. The biggest supporters of electronic vehicles in North Dakota is our lignite energy coal industry, because they know that has to power those vehicles. And so as the demand continues to increase, looking at removing that availability is going to become a challenge. And it's not so much the larger industries. Where we're seeing in North Dakota where the impacts are coming are on the transmission line insurance, even on those smaller service industry pieces. And so it's how do we manage this transition to what's next is really, really important, because I think there's going to be a host of societal impacts if we don't do it correctly that we may not be aware of, in terms of if I don't have the energy to heat my home, if I'm facing rolling blackouts, I think this country will revolt in some respects. And so how do you manage that transition with the technology that's available and currently deployable? And then again, where does the insurance industry lay in that? I think, again, we're financial regulators. We look at risk, we monitor those type of things. But putting us in the position of being either, climate regulators or energy regulators, I think is potentially a mistake. And I think we're getting more and more push in that space. And it's something that concerns me as an insurance regulator, is how do we manage that? As I'm not an expert in energy. Commissioner Arnold has that in her portfolio. She's able to probably have a little bit better viewpoint than I do on some of those pieces. But the majority of the states that insurance regulators aren't energy experts. We're not climate experts. We certainly understand the impacts and need to manage those and figure out how best to do this. But this needs to come from a broader nationwide or global plan on how do we handle this energy going forward, and then the insurance sector can layer in that. That's my opinion.
Well, thank you for that. And you did mention the state's plan to achieve carbon neutrality. Is that plan readily available, published on the governor's website or something like that?
So the goal is certainly published out there. We are working hard towards carbon capture and carbon capture storage. We've got a unique geology in North Dakota where we're able to we put 252 billion tons of carbon back into the ground through carbon storage, which would be enough for 4,000 years worth of our total output. And then so we'll be a carbon importer probably, which is I think is going to be important going forward. But we're as much as that is available, we're still facing impacts from, this is a new technology. Is this covered? Should this be insured? And you also got siting issues. I mean, we're going through all this would be run through pipelines. All this would be run through those issues. Those create environmental impacts, and so it's hard to know where the goalposts are at times with this transition. And I think that's one of my big concerns is it feels the goalposts continue to move and whatever we're switching to, the technology may not be there to pick up that entire base load. And so if we make that switch as a society or as a country, as a global unit, what does that mean for the people that rely on this electricity? And so I think we've got a lot of interesting projects in the way, but I think it's this transition that's going to be critically important over the next probably, 7 to 10 years, what this looks like and how do we manage that transition as an entire society.
That's a perfect segue to our representative of the private insurance market, John Huff. John, how do you view the role of insurers historically and currently? We'll talk about some of the future issues in another question, but please give us your thoughts about some of the comments you've heard and how insurers can help.
Well, thanks, Dennis, for the question. And let me thank Commissioner Mais and the Connecticut Department for the opportunity to be here with my esteemed colleagues today. So I am a recovering regulator. I was Missouri Director of Insurance for 8 years. And I was president of the NAIC in 2016. It's been a while ago. And then I joined the Association of Bermuda Insurers and Reinsurers. We're celebrating our 30th year this year, mainly representing the large, what we call Class 4 reinsurers in Bermuda that started 30 years ago providing a nat cat coverage. And we didn't know at the time that was really climate risk finance. And so really doing quite a bit of weather-related protection around the world now in 150 countries. So I guess the headline question is what's the role of insurance? And historically, that role has been to support global economies in ways that help identify risk. And more importantly, how do we share the risk once they're identified and then transfer some of that risk? The issues raised today certainly involve supporting the transition of the economy as we transition energy sources. But I also would just like to raise a caution of being humble in our role of what is the role of the insurance industry and insurance supervisors in this transition. That really we, and some of these points have been made by some of the previous speakers, is the role of the insurance sector and the insurance supervisor to make some of these energy decisions, or is it then to support those decision makers, those policy makers that are making those decisions, and then supporting the risk transfer mechanisms that are built around either existing energy sources or the transition to energy sources. And I think that's important to remember. Also, there's been some points about affordability and accessibility of coverage, which is a growing concern. I've just come off a full series of conferences as we look toward what we call our January 1 renewals in the reinsurance space. And you're seeing more and more concerns about the availability of capital in this space. And the analysts think right now there will not be a large influx of capital in the reinsurance space in 2024, at least for new startups. But there may be some available capital infusions for existing operations. So we really need to keep that in mind. It is a finite source of capital in supporting insurance and reinsurance, and how does that translate into contributing to the global economy and in the energy selection? So look forward to the dialogue of what's going forward as well.
Great. So I appreciate that. So we currently have, and this is a question for all of you, respond extremely pithy so we can get to some other questions. We've mentioned some of the energy transitions and the need for it. What's on the horizon? What new technology exists or is likely to come on board? And what's the role of insurers and reinsurers in that? So we'll start with Samantha. We told you we'd get back to you.
Sure. Well, I think it's really important to first recognize the technology that's already out there and really make sure that that is being supported with investments and with underwriting to take off even greater than it has now. You know, wind, solar, battery storage. These are the main things right now that can be deployed and that need the support in order to become a reality across the board. New technologies, new things, you know, could be decades into the future, and the time is short. You know, it's 2023. We have till 2030 really to minimize the risk from climate change and reduce emissions vastly. So I just, you know, I know we always want to look and see what the next thing is, and I'm sure the other panelists have thoughts on new technologies that might be coming, but the ones that are here, we really need to make sure that we're leaning into fully.
Commissioner Kreidler, do you have some thoughts about the future that you'd like to share?
Well, one is I don't believe that we're going to get anywhere if we get into the position of actually telling insurance companies what kind of risk they should be insuring. And this is one where I think the insurance companies, as long as they are unencumbered by government, will proceed to analyze the risk and make the decision as to whether this is an insurable event taking place. And I can tell you right now that it's very mature out there right now from the standpoint of much of the technology, as I was saying earlier, that's available to any enterprise, and therefore I don't see it as being an impediment by any means. And I really see it being one of where there's great opportunity for insurance companies from the standpoint of the type of investment that they're making this is a way that they can actually do much better financially, and that is clearly a major driver for them. The worst part of it would be to tell them that the technology may be changing a little bit. I mean, but even stuff like green hydrogen is something that has been around for a long period of time, and there is the admitted market is prepared to step up and insure that market. But again, it's a matter of having the will and on the part of society to put those projects out there. I don't think that insurance is going to be a stumbling block unless government puts impediments in the way of insurance going forward. And I think that would be a huge mistake, because I think the change is something the American public. We're seeing that with electric vehicles. It's just one example how quickly that has matured into our society. I think the society is ready for it. It's a matter of making sure that we as a society are prepared to move forward aggressively.
Well, thank you. So, Commissioner Arnold, I'm shifting a little in the topic. We seem to have agreement that we need to reduce greenhouse gases and that mitigation of energy sources in a productive manner. What's the role of adaptation to the changing climate? That's part of the transition. It's not necessarily the energy transition itself, but I'd appreciate your thoughts on that.
Sure. So the energy transition is going to look like a few things. So I mentioned earlier that it will look geographically different. So whereas an agent writing a farm, in rural Minnesota may have thought about agricultural things like structures, animals, crops. Now, often those will have some combination of wind and solar on them, as well as my grandma has signed a contract for solar. She calls it an extra crop. And so for those who have chosen to, put those kinds of resources on their land, the agent that's used to dealing with them in the insurance space will have to, figure that out. Similarly, 3 of my neighbors have put up solar over the summer. We're thinking about the same on our house. So individuals are more often contributing to our overall generation than, than they have in the past. And so that, I think, is one of the big differences. And as we think about ensuring those kinds of, fundamentally energy generation assets, will have to, different kinds of people will need to be involved in those conversations. The other thing is that there are a lot of new technologies. I mentioned hydrogen is one of them. Minnesota and North Dakota were part of a consortium of states that were just awarded, over $1 billion or just under $1 billion, excuse me, for a hydrogen hub. So hydrogen is a really promising potential technology, not just to generate, to generate clean energy. It's also to decarbonize other sectors like agriculture, and steel is another one that hydrogen's kind of, folks have their eyes on. Hydrogen as a way to decarbonize those sectors as well. That's a new technology. As we learn, we'll learn, as we learn more about it and see how it gets into use, we'll learn about the insurance aspects of it as well. Carbon capture is another one. There's a pipeline that's planned from Iowa up through North Dakota and South Dakota that has gotten a lot of attention, in part because of transmitting that carbon in a pipeline is, a technologically hard thing to do. And we'll have to figure out how, as technologies like that come on board, and maybe some technologies that we haven't thought of, how will those, what are the risks? How do we think about them in this future state? And, how are we kind of making sure that we're paying attention to what is happening in the future, which will look like what I've described and possibly some other things. And then how do we have the resources to make sure that there is, risk mitigation for the, for the structures of those through insurance.
So in terms of the current fossil fuel production, do you anticipate that being part of the mix as we go forward, and for what period of time? Do you have?
I think that's up in the air. The economics have changed quite substantially over the last 10 years. So wind and solar are now cheaper than coal. So you're seeing coal plants, be retired, not just because states like Minnesota have carbon reduction goals, but also because of the economics. So the economics will drive, some of the fossil infrastructure to be retired. Many states have carbon reduction goals that will also, drive those to be retired. Whether there's, nothing that is fossil based or not, I think that's a little too early to tell, particularly because some of the renewable generation is intermittent, and there is a base load that needs to be carried, and that could be carried by nuclear, that could be carried by, battery storage. It may be covered by some fossil generation as well. Heating is hard. Heating can be done with electricity. We do it in Minnesota, but you can. But that, those are the kinds of things. The other is transportation. It'll be a while, if ever, for there to be, zero fossil based machines that move around or move people around. And so, as we're thinking about the transportation sector, there's likely to be fossil generation, I think, for on a much longer time frame. And we're thinking about how that works in our state's carbon reduction goals and our net zero goals, but each state will take that a little bit differently.
John, you've heard Commissioner Arnold's thoughts about adaptation. what are your views about adaptation and how it works in the, it can help with insurance and risk transfer?
Yeah, well, I think you're seeing some of that already. I think you're seeing some investments and some movement in technology. At least I can speak for my state. Certainly, we've put even in our last legislative session, we put $1.2 billion into this adaptation. I'd argue kind of transitional movement. Primarily, a lot of that is going into the carbon capture and sequestration. So that's the technology I think that we've kind of looked to attack. That one not only benefits North Dakota, but it also I think benefits the overall goal of moving to a low carbon or no carbon future, and I think that's where you're going to see some large opportunity, right? It's our belief with this you can maintain some of that base load energy requirement, which is critically necessary for this at this point until we get to whatever battery storage or whatever the new technology is, whatever comes next, but still be able to maintain a fully functional society. To be honest. I would caution. I think there's one thing in this adaptation or transition that I'm not sure is getting enough attention necessarily and this may not be agreed upon by many of the panelists here, but this energy formation and energy industry is relatively mature in a lot of spaces, and I think they're seeing some significant movements. And the latest is again the carbon capture and how do we get to that low carbon emission or no carbon emission from some of our traditional energy sources. The same scrutiny needs to be given for these next the next sources. So what are the results of the green energy boom? What are some of are there battery issues? How do we dispose of batteries that are out of commission? How do we dispose of some of the other products and pieces that are a natural result of these production? And so making sure we're not trading one environmental issue for another, I think, is really important. And that's why I think our strong support for that carbon capture piece, not to say that there aren't going to be issues with that, and there are issues with everything you do, but I think that attaching new technology to an existing industry, I think will allow for that transition to be as quick as some would believe we need to have it. And so, like I said, North Dakota has invested a significant amount of dollars into getting to that next wave of energy or next energy production source, and that's gonna I think is what can hopefully get us to that adaptation to whatever the new normal is.
Thank you, John Huff. Yeah, we had Commissioner Gottfried once again provided the perfect transition. He discussed risk issues, and you represent insurers and how they look at the risk of new technologies, changes in the climate. Provide your thoughts about the role of insurance in this changing world, as well as the role of adaptation.
So I'll take a step back because I think it is important to realize that the U.S. system of state-based insurance regulation does have the tools necessary for providing coverage with new technologies. So I think Commissioner Kreidler referenced the advances that the admitted market's making, but also significant growth right now in the excess and surplus lines markets. So where perhaps there's more creativity and more innovation in new product development and ability to put capital behind some of this new technology. Risks that are perhaps harder to explain in an admitted market format. So the tools are available, and I think that the coverage will be there. You see much more sophistication at the underwriting level and the investment in weather and technology of where those products can go. I think sometimes when we talk about adaptation, it's good to pause because we don't know our audience for this seminar. They'll likely be more educated on all these issues, but really just explaining what adaptation is. There still seems to be a great deal of confusion between adaptation and mitigation, but really adaptation is just taking actions to reduce the negative impacts of climate change and build resistance to climate-related shocks and stresses across all of our systems. And so this may be changes in our processes or practices, as well as physical changes to the environment to better manage climate impacts. It may be as basic as going back and revisiting building codes, which we see a renewed interest in, about just making our homes and businesses more resilient. So there's some foundational steps that certainly can be taken and supported by insurance supervisors and the industry.
Thanks, Sean. So, what is the role of insurance regulators in this process? We've already touched on that. Are there things that regulators can be doing, leaning in? John Huff, since you're the former commissioner, you get to be the gadfly number one. Let's have your thoughts.
Well, first and foremost, the insurance supervisor or regulator's role is to ensure the solvency of the entity providing coverage. And so that means making sure there are guardrails in place on the liability side, on underwriting of risk, but also guardrails on the asset side. I'll probably go into less on the asset side. We represent mainly large property and casualty reinsurers, where much of their asset mix is very traditional, even treasuries. We have to constantly be ready for that Cat 5 hurricane. So very conservative liquid investments, which might change on longer tail investments. But on the underwriting side, it's really allowing the freedom to get out for underwriters to write business. And to do so in an environment that we use our number one tool that's practical for supervisors, but also the industry, and that involves making sure that we have rate adequacy. It's so important for an insurance supervisor to know that an entity is writing coverage at a rate that is adequate to cover the losses. And there's so many tools available to supervisors, whether it be loss ratios or the financial reporting, to ensure that's the case. And we're seeing a great deal of emphasis of rate adequacy now because it's really the best barometer, if you will, of how much a risk should cost. And you see it vary by market. You also see it vary by entity because of the use of non-correlated risk. And that's where we're really seeing an added benefit for large reinsurers because they have the benefit of non-correlated risk. If they're taking California wildfire along with Missouri tornadoes and Florida hurricane risk, but also adding Japanese typhoon risk, then you have that benefit of the non-correlated risk really playing to their benefit and ultimately an advantage for consumers and supervisors.
So this has been a tremendous discussion, and time is flying fast. I wish we had more time. So I'm going to give you all an opportunity to provide your closing thoughts, incorporating the roles of insurers and regulators. What do you want policymakers beyond the insurance industry to do? What do you want regulators to do, and what should insurers be doing at this time? We're going to do it in alphabetical order. We'll start with Commissioner Arnold.
Sure, of course. I think that, as we're thinking about insurance, it's kind of, insurance is a tool that entities have to manage their financial risk. And, it should continue to be a tool to manage financial risk, over time. And so, whether that's protecting assets, I think we need to have really good, honest conversations about, what does need to be insured, what needs to be insured for the good of, an economy or, companies, and also for workers. There are, folks that are working across all of these sectors, and, having, uninsured assets isn't a great spot to be in. That said, there are, sort of economic drivers that are moving insurers and others away from fossil assets in particular. And, I'm not one to think that we should be necessarily wholly shifting the market. If the market's going somewhere, that, we should be mindful of that and understand that that's where it's going, but make sure we have appropriate, financial solvency rules in place, make sure we understand what the risks are as companies are taking them on or are shifting their asset profiles. If the market is moving in a particular direction, then we should know if there are gaps as a result of that movement. And then, adapt our regulatory space to understand, where that movement is. I think it's important to also just know what's happening and where companies are going, and because that helps us understand what our market looks like now, what it'll look like in the future, and how that'll impact, folks within our state and beyond. And so I think, it's important for this to be top of mind. I'm glad that the Connecticut Department is pulling together this conference. I think it's really, it's a big systemic change. It's not going to be easy. It's not going to be probably super clean. It'll, sometimes change is messy, and that's okay. That's how things, that's how innovation happens. That's how many of the things that we now know in our everyday life have happened. But as regulators, it's incumbent on us to understand kind of what direction the market is going, and then making sure that we can kind of shape it in a way that, works for our state.
So let me just follow up on a comment that you made. You were talking about letting the market adapt. That's contrary to what some have said, is that there should be more of a directed focus to encourage insurer investment in underwriting to move towards green and away from fossil fuels. Do you have a view on that?
I think that so I'll take the example of Minnesota. We have in our state legislature out of this last session 100% clean energy or carbon-free electricity by 2040. So that's something we've set for the energy sector. The insurance sector is going to follow that, and follow it to the place where other sectors are going for states to meet decarbonization goals. And so I guess I'm not to sidestep the question, but it's happening. And so, it's happening kind of at a pace that is, fairly rapid, which can be a challenge. And we should make sure that there are insured assets. But I'm not sure that it makes sense in either place to be pushing to, we should be making sure there's insurance. And as the market is going now, mostly that's going to be transition to renewables and away from fossils.
Do you have any other thoughts that policymakers should consider going forward?
Yeah, and I think there's another panel on this, so I won't take that thunder too much. But I do think that, as we've had conversations, resilience and community resilience and an ability to have a conversation beyond just, I insure this property and it has these features and I think it might flood this many times, but to really think about how, as communities and individuals and our places that we live are more resilient. So there's a lot of federal money that is available to help with resilience. I'd love to see the insurance sector kind of there and having conversations, because if a community is putting in a flood barrier, or they're like thinking differently about the way that they manage their water, as an example, then that's a fundamentally different landscape for selling insurance, for underwriting insurance, and for the people in that area if it's been flood prone for a long time. Similarly with ways to have, when you enhance the electrical grid and can get, make it more weather resilient, then instead of having a week of power outage or 4 days of power outage, you're down for 24 hours. That matters for insurance because you have a whole lot less damages when people are able to, get their lives back up and running. So I'd really love to see a more broad conversation and more intentional action to say this is something that we can all work on together. It's something that we can invest in our communities. There's a lot of federal money. There are a lot of municipalities and states that are thinking about how to be more resilient, and how do we make sure that we engage a sector that, if we do it right, we'll get huge benefit from the investments, by lower claims cost. So think about the one house standing in Maui and after the wildfires, or the community in Florida that survived the latest hurricane because they had basically decided that they were going to be a resilient community. The more we can encourage things like that, the more we can help people to be back on their feet after natural disasters, but the more that we can also help to make sure that there's a resilient insurance industry in addition to a resilient community.
Well, thank you. I can speak on behalf of my association, as well as many members of the insurance industry, that we would welcome the discussion on resilience and how insurance plays in that area.
Great. I'm happy to hear it.
Commissioner Gottfried, you're up next.
Yeah, well, thanks. It's a very loaded question. And I frankly agree with a lot of what Mr. Huff said, John said earlier. I can tell you what I don't think we should be doing is getting in the middle of this. I mean, I don't necessarily want to be in the middle of this fight and getting into the point where we're having arguments over what should and should not be written out of my legislative session. You know, when you get prescriptive like that, what my legislature may say in North Dakota may be very different than what Commissioner Kreidler's legislator may say in Washington. And when you start pulling the market apart, it seems like that you're creating problems. And so I think our role is honestly rather boring. I love my job. I love what I get to do, and it's fascinating. But it's that financial regulator piece. It's to make sure that the companies are operating in a solvent manner, that they're doing so and with upholding our laws, and that there's consumer protection in there. And so it's not as sexy as I think it's maybe made out to be at times, and where our role we should be hanging to what we should be doing. And so I think it's also that and trying to encourage, you know, the availability and affordability and doing the scrutiny that we can there. But the minute we start getting overly prescriptive on good risk, bad risk, and we're making those determinations from whatever Capitol building we happen to be in, I think that's rather short-sighted, and it's going to create more issues going down the road than we probably want to acknowledge. And so I think honestly, our role at this point is as insurance regulators to be able to have these honest discussions and be like, okay, what are the true risks? I'll give an example in North Dakota. We had a lignite energy coal company who couldn't find insurance. And you know, the reason that they got from their primary insurer was, well, because we don't write fossil fuels anymore. Okay. But so we go have a further discussion. Well, you come to find out that they're a bad risk. They were a bad risk. I wouldn't have written them if I was an insurance industry expert. And so it's being able to have those honest discussions, to be able to prepare consumers to moderate and mitigate their own risks is really, really important. And that comes from both the industry as well as the regulator side, to have those honest discussions with our constituencies, so we're all informed on what's actually happening in the marketplace. And I think we've gotten away from that a little bit. I'm seeing it drive back into that. And there's a larger role for the insurance commissioners to be kind of leading some of those discussions and having those honest conversations. But again, when we start straying outside of our lane of that financial regulation, that's when I see problems. And so I guess to answer your question, Dennis, I can see more of what we shouldn't be doing than necessarily what we should be doing. And I'll leave it at that.
Commissioner Kreidler, why don't we jump to you? You seem to have a foot in both camps. You know, you're leaning forward on a green energy transition, as well as, you know, recognizing that the insurance industry is different. Please let me have your views.
Well, I certainly feel right now in the current environment that we are economically, and it's probably going to last for a while longer, that it's a very tough market out there from the standpoint of reinsurers in particular. That it has not, have not been profitable years, and they obviously make adjustments for that. Unfortunately, I wish that some of the insurance companies would point that out, that it's the difficulty with reinsurance and the coverage and affordability and availability in some cases for certain types of projects, rather than pointing a finger and saying this is because of meddling here that's taking place socially, not because of economics, because I think the economics are there. I think that the insurance industry, one thing I'd like to see more of, obviously, is some sharing of data when it comes to catastrophic events and the prediction and the data that's available so that we can do a better job with that in a much more aggregated basis. You have government data, which is always going to be public, but industry public information typically is considered proprietary. And is there some way of aggregating that in such a way that we can benefit everybody from the standpoint of the knowledge that's out there so that the right decisions are made? I think that this is a real opportunity for the insurance industry right now, as long as they're not impeded in what they can do and how they invest. And quite frankly, the society needs to be there to make the appropriate adjustments. And one of them is certainly when it comes to the challenges of wildfire, for example, which we're getting a lot of right now. We have in the state of Washington, losing 400 or 500 homes just this fire season. This is one where land use and building codes need to be something much more vigorously enforced and standardized, so that you get the kind of protections out there, so that when you run into a situation, it's not a matter of insurers backing away from fire-prone areas. It's recognizing that we as a society need to do more in order to make it desirable for that investment to take place. That's just one example. I think we've got a great opportunity out there for investment for the industry, which is going to be profitable for bringing about the kind of dynamic change that the world wants. And with that, it's going to be something that's going to happen sooner rather than later. We just need to step up to it and not impede it going forward.
Thank you, Commissioner. Samantha, you're going to get the almost closing shot here. As Commissioner Gottfried has posited, we are not in a situation where we can throw a switch and have green energy sources meet all of the nation's energy needs. So with that as the backdrop, what do you want policymakers to do? And since we already have these risks and we need the electricity, how do insurers who are trying to ensure that businesses can operate and produce the current electricity, what do you want them to do in short and longer term?
Yeah, so I think it's, well, first important to recognize that there is a transition happening. There's multiple things happening simultaneously, planning, building out the grid and bringing on renewables online. And, as Commissioner Creedler had said, the mix in many states has tipped already towards renewables. So we are getting there, but what we need the insurance industry themselves to do is to make commitments that align with the goals for a livable planet. And those are, internationally set goals. International insurers have moved and taken action, and we want to see American insurers follow. And that is not to turn off the tap right now, but to stop new fossil fuel projects that are going to add to the carbon footprint, then to have a plan for phasing out what exists, and to do it justly and equitably. And that, we need them to make commitments and put action steps behind those commitments. And for regulators, really, I think thinking about, it's a real risk for insurers to keep taking on catastrophic climate losses year after year after year. And so we need to make the transition. It's, the risk is financial loss, it's reputational, there's a potential of legal risk. And so what they're doing right now is they just can't continue doing it. And so as both insurance companies and regulators, it's really important to make commitments and have a plan and action steps for getting to where we need to be.
Well, thank you. And I thank you all. This has been a robust discussion. I enjoyed hearing from you all. The issues aren't going away, and we need more conversations like this to share our perspectives and move in the direction that is beneficial for all of mankind. And with that, I thank you, and we thank the audience for listening in. Thank you very much.
The impact on the insurance industry from climate change is going to be quite significant. Many industries are going to be disrupted as the people's lives are going to be disrupted through the climate change. I'm going to touch on some of the topics, and this is based on the understanding and recognition by most experts that the number of natural disasters will increase. So let's look at what may happen with forest fires. If there are forest fires that we have seen in the recent past, the particulate matter increase, and then individuals, because of the smoke inhalation, but the particulate matter increase, the people with respiratory illnesses, the ones who have cardiac problems, respiratory problems, or they are older, they are going to have more complications and are likely to be in the emergency departments and have high morbidity, high mortality. Mortality rates will go up from that. So that's one part that's anticipated in the healthcare impact. The other healthcare impacts are going to be the extremes of temperature, but more so with the heat itself is going to have an impact on the well-being of the individuals. Various illnesses are associated with the dehydration, increased risk of infections, urinary tract infections go up when somebody has dehydration. And again, respiratory illnesses are associated with the extreme of temperature changes that are anticipated as well. Another component is when there's flooding that is likely to increase because of the climate impact. The flooding is associated with more illnesses, diarrheal illnesses. There are waterborne illnesses, and that's something important. When people have some of these illnesses, they move from their local comfort areas. The safety of the water, drinkable water, is going to be impacted, and that leads to a number of illnesses, for especially when the people have poor immune systems with all that they are experiencing with the back-to-back challenges. Migrations that may happen would result in more illnesses, injuries that are associated with it, and emotional trauma that is associated with it. And that's something that can be damaging to individuals. We have seen that in some parts of the world already who are at a higher risk of climate-related problems and migrations. The migrations have had a long-term psychological impact on the people who have experienced this as well. The actual trauma associated, physical trauma associated with various natural disasters is quite significant. The first hour we talk about is how many lives can be saved if there's an earthquake or another disaster which results in people's well-being. So humans will be at the center of the challenges associated with the climate change. The humans will be impacted. They will be number one victims. That is going to be, unfortunately, if we do not change and intervene. But there's going to be negative disruption of all industries associated with the well-being of people, and the insurance industry will be no different. That's why it's important for us to have a better handle on prevention, but also as an industry, there needs to be a better understanding that the investments of protection would be long-term beneficial for the industry itself. So thank you. I'm Senator Saud Anwar, representing the 3rd Senate District, including the towns of East Hartford, South Windsor, East Windsor, and Ellington. I'm currently the co-chair of Public Health Committee, and this is one of the things that does bother us and concerns us and keeps us up to see what can be done so that we can have a plan of action for mitigating some of the risks, but more important, preventing them. Thank you so much.
Welcome, everyone. I'm Jeff Sikowski. I direct the Center for Insurance Policy and Research at the National Association of Insurance Commissioners. And this is session 4, Bridging the Data Gap, Protecting and Empowering Consumer Decision-Making. In an increasingly complex climate landscape, informed decisions are paramount. Our panelists today will explore the critical role of data in empowering consumers to make resilient choices, and how data-driven insights protect against risks, fortify communities, and ensure a sustainable future. So I'm pleased to present to you our panel. I'll start off with my colleague at the NEIC, Jennifer Gardner, who is the Catastrophe Risk and Resiliency Research Manager within the CAT Modeling Center of Excellence. Next is Tim Judge, who's the Senior Vice President and Head of Modeling and Chief Climate Officer for Fannie Mae. Next is Dale Hall, the Managing Director of Research at the Society of Actuaries. And finally, we have Amy Bach, who's the Executive Director of United Policyholders. So let's jump right in to our questions here. And we'll start off with, I guess, we talked about it in the description, empowering consumers. But as we had discussed, is this potentially maybe a little bit too much emphasis on empowering consumers? In some ways, are we expecting, too much from them to make these sort of resilient choices? There's kind of some background in this. There is a lot of data that exists that shows that resilience investments pay back $12 in benefits for every $1 spent, $5 to 1, et cetera. But we still see that mitigation uptake behaviors by homeowners has remained relatively low. So Tim, I'll turn this over to you, given your role at Fannie Mae, and how do you think about that, empowering consumers and placing the emphasis on them in relation to your climate exposed assets?
Jeff, we spend a lot of time trying to understand what's going to drive consumers to action relative to climate. And really, when we start, we look at 3 gaps. The awareness gap: do they understand their risk, and do they understand what they can do about it? The coverage gap: do they have the insurance they need? And then lastly, the resiliency gap: is their property as resilient as it needs to be given current climate conditions? And those things work together. And so what we find is there is still a significant gap with consumers about understanding what actions they should be taking. I will say one of the things that's come out with our latest consumer flood survey is we are starting to see some changes there. So our most recent survey, we asked consumers, have you taken any action to make your property more resilient? That response jumped a considerable amount from our previous survey. So that's good news. The other bit of good news was we asked consumers, were you willing to invest $5,000 in your property to make it more resilient if it kept you from a catastrophic loss later on? And 2/3 of the consumers said, yeah, we're willing to invest $5,000 if it makes my property more resilient and I don't have a catastrophic loss. And obviously that's 2/3. If you go down that number, actually, there are consumers who are willing to invest $10,000, $15,000 in order to make their property more resilient. So whereas I think there's still undoubtedly a gap, I think you're starting to see action where consumers are taking a little bit more agency in making their properties more resilient.
Just as a quick follow-up to that, Tim, I mean, it's your survey shows that they're interested, right, in kind of doing that. But two parts to this, which will lead into the next question. Do you kind of feed them some data, right, around that risk too? And then do you see sort of a follow-up, that they're interested, but they actually do it?
So good question. So the first one is we do stratify all the respondents by, are you living in a high risk flood zone, medium risk flood zone, or very low risk flood zone? So we try to stratify them in terms of understanding the risk already. And we test them on their understanding what zone they're in first. But secondly, we do see the responses pretty much tied to the risk zone they're in. So if they're in a 100-year flood zone, they're far more likely to say that they've taken action. And in fact, when we ask folks, have you taken action to make your property more resilient? If you're in a 100-year flood zone, 40% of the respondents said, yes, I've taken action to make my property more resilient. So we are doing that. Of course, I think the other part is, whenever we do any surveys and outreach, we're trying to push consumers to more information. And I say more, I don't know if I should say more, because we know consumers can sometimes struggle. The more information isn't necessarily better. But we do try to push them towards information that allows them to understand not only what the risk they're at, but what actions they can take. And when we do consumer outreach, we track where they go along our website to see what really gets them interested and where do they go on the website.
Thank you. And maybe we're going to come back to that idea of messaging in a few minutes. And so maybe you can speak to that a little bit more. But building off of the risk, so we just heard from Tim that they kind of use the flood risk maps, right? And we can talk about how great those are as sort of a risk tool. I mean, they're fairly broad in terms of their level of granularity. But Dale, I'll turn it to you first. Maybe can you talk to some of the work at the SOA around providing climate-related information? I'm thinking of the actuarial climate index or maybe other data or risk initiatives that you have underway.
It's a good question, Jeff. I mean, data is clearly a big part of what the actual profession does to assess risk, but also that same data, I think, can be really a helpful consumer tool as well. So, when we wanted to start studying, what is the impact of these climate trends or extreme weather events, looked at a lot of information and developed this Actuaries Climate Index. You can go out and find it at the website actuariesclimateindex.org. It's a partnership among us and 3 other North American organizations that study what these weather patterns have been and what climate trends have emerged using kind of a historical baseline and then noting how anomalous current observations are compared to that. There's 6 different variables that are currently in that index. It's the frequency of very extreme high temperatures and extreme low temperatures. It's extreme precipitation and drought. There's a look at wind power that might emerge from hurricane or tornado events, and then a look at sea level rise and change over time. And the great thing is that there's no lack of data or information that has been provided by a lot of government organizations. We leverage a lot off this Global Climate Historical Network, GHCN, daily set of information that's published by NOAA, the atmospheric organizations. And then even more broadly, there's a lot of satellite tools and other things that we push our actual profession towards, and consumers can access as well. And just see, what are the patterns that are emerging? What are the trends that are happening? And I think more and more you'll see that we'll publish things that are going to be, more specific to a specific geography. And we release it quarterly, but I think we have aspiration too to do it on a much shorter time step to give helpful information for both actuaries and consumers.
Yeah, if I could follow up briefly on that last point. So, it's an actuarial climate index, and actuaries, they love data, right?
Sure.
So, a lot of this is climate hazard data, if I heard you correctly, but do you have any sense of how consumers, that are non-actuaries sort of employ, the use of this index?
Yeah, I mean, I think you can kind of track what your geographic location is through studying that index, and then seeing what are some of the variables that might be most impactful to your local location. A lot of places it might be something like extreme wind power that emerges in the Midwest, and in other places it might be the coastal impact of sea level change. So I think consumers can kind of take a look at where their specific property is, where their home is, or things like that, and study these are the types of risks that may come up, and how should I be getting more educated, or what type of insurance might I need that could be impactful for my financial security.
Thank you. And Jennifer, I'm going to turn to you here, and we just kind of heard from Dale, like this climate hazard based tool. But one thing, and he's talking about that in terms of impacts, and there are other tools that exist, publicly available tools that kind of spell out not just the hazard itself, but also the impacts to properties. And one in particular is the FEMA National Risk Index. And I was wondering if you could speak to that, just sort of in general, but also how that relates to what industry, the insurance industry would primarily use, which would be a catastrophe model.
Yeah, absolutely. As you mentioned, I think there are a lot of tools out there available, some at the state level, some at the national level. I think by and large, the one that has stuck out as an exemplary product is the National Risk Index. It was codified into law in December of 2022 with the Community Disaster Resilience Zones Act. So it's required that FEMA update the NRI, as it's called, on a regular basis with new data as it emerges. So that's helpful. And it's an interactive tool. So you can actually go out and do the mapping and look up your own zip code or your own area for the risk to 18 natural hazards. And it includes social vulnerability and community resilience information at county and census tract levels. So that's really helpful in order to target resilience planning across the country. So it can be used to support resilience through mitigation planning and promoting risk communication for individual insureds. As I mentioned, it's updated by FEMA on a regular basis. It's also used by FEMA to designate community disaster resilience zones. And then using the data sets, FEMA has identified the most at-risk and in-need communities based on their social vulnerability to create resilience zones. And so far, there are 483 census tracts that have been identified, all limited to the states. FEMA is also planning to designate additional zones in the tribal lands and territories. And the communities in these designated zones will receive 40 points out of the total 100 needed to apply for a Building Resilient Infrastructure and Communities grant. So essentially, the CEDARS designation provides a geographic focus for financial and technical assistance from federal funding opportunities, which is great. Not only do these zones get more points toward their grant application, they also qualify for lower cost share requirements, and they receive priority for federal assistance navigating the grant writing process. So a lot of these low-income communities can't afford to hire a grant writer, and this affords them the opportunity to get some assistance from the federal government. Ideally, access to the federal funds would also incentivize capital to be pooled with public, private, and philanthropic agencies and organizations, so that you could form public-private partnerships and resilience. And it is similar to what the insurance industry uses to assess the risk of loss to their portfolio of insured properties. The primary difference between the public version, the FEMA NRI, and a commercial model is the ability for an insurer to apply financial components, such as their actual loss exposure versus what would be absorbed by the consumer in terms of the deductible and the limits applied to the policy. So commercial catastrophe models experienced widespread adoption after Hurricane Andrew in 1992. And, modelers or insurers have had access to this risk information for a long time. So we really think it's a positive thing for FEMA to come out with this NRI, which provides more public-facing information on the risk.
Yeah, and that really gets to the notion of, fortifying communities, right? And in doing this through sort of a data, driven exercise to find funding to help with that. But I do want to come back to this notion of consumer decision-making around resilience and effective messaging of risks, right? So again, like the tools themselves, like they're risk assessment tools, but you still have to get this into the hands of consumers, and they need to be able to understand that and make choices around that. And so, Amy, with your work, at United Policyholders, working with consumers on the ground in California, particularly around wildfire risk, could you paint a picture of, how you interact with consumers, how you sort of take these risk assessments, relatively complex risk assessments, and drive that for community and individual resilience planning?
Sure, thank you. So in the areas where insurance has become harder to find and more expensive, those are all the areas most vulnerable to climate change, right? So California, WUI, wildland urban interface, and then of course in all the Gulf Coast states. Insurance itself has become a data point. I mean, the cost and the options that people have for insuring their assets is stimulating some people, more and more people, to to put time and money into risk reduction. But we in California, so people know if they live in an area where there's been a wildfire, as things stand today, a lot of people have no choice but to be in the FAIR plan, or and more and more people are opting to go BEAR just because the price tag is so high. So they know that the risk in their area is perceived to be high. They know that because insurers don't want to sell them policies, right? We've had, California passed a law that requires real estate disclosure of a wildfire risk, and we also have now a regulation in California that tells people that they have the right to find out what their what their insurer's risk score is for them, what score has been attached to them. And then the insurers are supposed to provide an appeal process if they want to challenge that. So I think people, awareness is definitely rising, certainly just by virtue of insurance problems, right? There's a lot of tension right now in California around, are people getting an appropriate break on their discount, or are they getting any kind of reward for risk reduction, right? So we know in Colorado, there's a program that's been in place there in one county, and I think there was about 8 insurers that were participating last I checked, and for the people who were graduates and went through the program, had their home risk reduced, those insurers that were participating were agreeing to renew those homeowners. So that was sort of an organic model we were hoping would take hold in California. It hasn't. So it's a work in progress. There have been tools. My organization puts out a tip of the month. We are constantly trying to message, to people, you got to think about, this is your biggest asset, and you got to think about that not only is it worth investing in risk reduction to get a better price on your insurance or to have more choices, but to have your home not be destroyed, or damaged. So there is responsibility on the homeowner. It's definitely gotten easier to find out what your local risks are if you don't read the paper and you don't actually know. There have been various tools over the years. USGS has a tool, and every time we see one, we promote it in terms of put your address in here and you can find out what your risks are, know your risks. But it is very important, I think, that all of us in fields that have that want property owners to pay attention and to be proactive, that we be putting out similar messaging, that including, it's not just to get a break on your insurance that you should do these things, it's so that your home will be able to withstand these events, and to help people understand always that that you can't just think that the government's going to ride in on a white horse and give you free money after a disaster. That so we do quite a bit of messaging to be a reality check to people and say, the average FEMA grant, individual assistance grant, is like $6,000, yet it's income, tied, and the max grant is 41K or something. That's not going to put your house back. So, so there's a lot of work going on, I think, to educate those people who are not reading the news and paying attention and I think, to Tim's point, the one of the facets of climate change that is really affecting a lot of people is this crazy heavy rains and areas flooding that have never flooded, and people having the kind of deluges that we just didn't used to see. We just saw that in New York City. It wasn't like there was a hurricane, it was just super heavy rain, and again, that gets people's attention.
Right. So it sounds like in some ways, the risk assessment, yes, they exist, but people in California, for lack of a better term, are kind of getting beaten over the head by insurance pricing. And so it's not that they need to be so much aware of the risk, like they're being told that you're in a risky area. But can you talk for people who haven't sort of gotten that price signal yet, like or even those that have, do they really sort of understand like what it is that they can do? Do they feel like they can do things that will make a difference, not just for their own home, but also for their community that they live in?
Well, this is definitely an area where we're seeing great progress. So like just a couple months ago, my organization had been working with the Minnesota and Wisconsin insurance departments on a series of rack cards to short and sweet, boom, boom, boom. These are the things you need to do to fortify your home. These are the things you need to think about with your insurance. And then there was a whole resiliency tour that the commissioner, went on, and we helped connect the department to a number of community groups in that area. So I think, because there are people like us that are really paying attention, certainly we're seeing more talk about the risk reduction and more communicating concrete steps. But, up until a couple of years ago, we didn't even really have a very concrete set of home improvement steps that you could take for wildfire risk reduction. It's only been fairly recently that everybody finally agreed and kind of got on the same page. Now for hurricane and wind damage, we've had, and of course, IBHS, super, super important, the work they've been doing, saying if you put roof tie downs, much less likely that your roof is going to blow off. And that's a very concrete message to people. It's often confusing when experts are kind of waffle, like, oh, are hurricane shutters good or are they not good? Or how important is it to do double pane windows? But I would say for the most part, experts are agreeing more and being more clear with lay people. These are the things you should do. These are the things that matter. And here are the resources that can help you. My organization got a grant from the California Office of Emergency Services, and we set up a resource center where we have a map, and you can click on your county and it'll tell you, are there grants, what grants are available in your community, who's doing a chipper day, who can you hire to help you. So there's just a lot of progress being made. But it's slow in the adoption. It's often can be discouraging when you look at the number of homes that have actually been, let's say, elevated, the number of homes, we would like to see those numbers higher.
Thanks. And Tim, let's maybe bring you back on this because you started to touch upon some of that earlier. Like you present households with information that, what would be useful for them to do, cost effective is sort of what I heard. But with flood, it's not a whole lot you can do, right? You elevate your home, it's super expensive. There are sort of flood proofing things that you can do, but I don't know, where do you sit, Tim, with kind of messaging to consumers around that?
Well, I think there are, and again, this is becoming like a kitchen table mainstream media topic. So we are, to Amy's point, getting a little bit more conversant even at the individual household level on this. There's different types of floods, right? And so raising your house is a coastal flood, surge flood issue. But we have, I think the biggest thing that we see, right, is inland flooding growing. And there are topics that you can do. There's just basic work around your house in terms of sump pumps, grading, that actually make a significant amount of difference. And one of the things that we've done recently is partner with the National Institute of Building Sciences to come out with a resiliency roadmap. And in there is literally, here's what it takes to make your property resilient to inland flood. It takes a sump pump, it takes a battery backup for that sump pump, and it takes grading. And here's about what it costs, right? So we are trying to put that information out. I completely agree with Amy. It's a slow rolling change, but we are seeing people take more action, right? And I think the thing that spurs action is not just the information, it is the signals that people are getting from both the affordability and availability of insurance, right? And we are seeing folks, if I'm an individual consumer, the affordability is clearly may make me take action. I can tell you the availability certainly makes me take action, right? And we see that. And where we've talked about the IBHS, there's a lot of success down the Gulf Coast with fortified wind, where there's been a lot of properties, particularly in Alabama, fortified the roofs. And now regular insurance companies are writing those policies now. Those aren't being written having to go to the state wind pool anymore, because people will reflect and acknowledge that resiliency. I think there's more to be done there. I think that's not systematic like I'd like, to Amy's point about, is it happening in Colorado? Is it making its way to California? It should make its way everywhere, number one. That you should know what the impact is to your insurance rates if you take these actions. Secondly, the other thing that has to happen is resiliency has to be seen as something you search for in a home. And we don't see on MLS, we don't see, the resiliency envy that we want. Hey, that's a property I want because it's really resilient. You don't click on that. You click on waterfront far quicker than you click on waterproof. Okay. And that needs to change a little bit in the future. But yeah, when we go into all different communities, the other thing I would say about this is we're not going to address the information and awareness gap at a national level, because that's not what resiliency and what weather and climate means to each individual. It's a very different story in all different parts of the US. So we go and try different messages in Maricopa County, which has decent amount of inland flooding, versus Lee Collier, who's had a very recent hurricane, and we see what resonates. And quite honestly, the things that resonate are things that are really local based, and the messaging is delivered by somebody local. Yeah. The biggest thing, if you want somebody to change, is have their neighbor change. Right. We've seen that with solar for a long time. I think you see the same thing with resiliency. If somebody in your neighborhood takes action, you're far more likely to take action than if you see a national mandate.
So we've heard there's tools that exist for consumers to access. There's sort of messaging around that as well. There's signals that they're getting on risk. But the one thing we're going to come back to is on the funding of this, because somebody's still got to pay for it. And so, Jennifer, I'm going to turn to you, and you could speak to sort of the work within the CAP Modeling Center of Excellence and the NEIC about interacting with state mitigation programs that provide funding. And we've heard IBHS, for those following at home, this is the Insurance Institute for Business, Home, and Safety, and also others in this community of practice, including the Federal Alliance for Safe Homes. Can you talk to that work going on at the NEIC?
Yeah, absolutely. So it all kind of started several years ago with just some workshops around what's going on in the mitigation space and bringing the regulators in and sort of informing them about what's going on in this area and the different organizations that are available to help support efforts. I think we're seeing a lot more interest peaked today by more states, not just, along the coast or even in wildfire prone areas. It's very widespread where there's interest from a lot of different states across the country. So, we've been trying to raise awareness about the different ways that state insurance departments are improving the resilience of their communities. Of course, that a big piece of that is mitigation grants. It also includes improving building codes, adopting the latest building codes. And there are some states who have been really great advocates for adopting better building codes in their areas. And also it just comes down to educating consumers. So I think there's a whole swath of information and ways that states can get involved. And we've really been trying to help navigate them through that process. And then, working with individual states to get grants to kind of further their own work and have some funding to have some consulting efforts to do that. And we've been working with individual states on that as well. One of the primary ways, though, is through the funding with the mitigation grant programs. There are several that are currently up and running. The Alabama Strengthen Alabama Homes program was mentioned earlier with the Fortified. Louisiana copied that same program and has a Louisiana Fortified program. The California Earthquake Authority has had a brace and bolt program for earthquake retrofits for a number of years. And then there are others like Minnesota who introduced a grant program in their legislature this year. And really, we've just been sort of highlighting the existing programs so that the states can share information amongst one another and figure out how to get this done. There's a number of different moving pieces and parts to getting it passed through the legislature. And it's no small task, especially on getting the funding to even get the grants out there. So there's a lot to overcome and a lot of challenges, but I think that there's a lot of interest from the states. No states do it alone. There are many organizations in the resilience community of practice that are willing and able to assist. One of those is United Policyholders with Amy. There's also the Insurance Institute for Business and Home Safety. They designed the Fortified program that's used by the Strengthen Alabama Homes, which is really kind of a seal of approval for the insurance industry to be able to stamp this building as fortified and resilient, and then be able to apply the mitigation credit on the insurance premiums, and then just really be comfortable with writing the policy in the first place because that they know that it's been certified by the IBHS standard. And then, from idea to implementation, the first step is really getting the states interested, and then they've got to be armed with the information to get through the hurdles along the way. So within the Catastrophe Modeling Center of Excellence, we're trying to help navigate state insurance regulators through that process and make it easier for anyone interested, and then connecting the regulators with the different groups that can help them, like United Policyholders with the consumer outreach, like IBHS, and then Federal Alliance for Safe Homes is another one who's been a key partner of ours in resilience and working towards better community planning.
Yeah, thank you. I mean, a lot of work going on at the NEIC with the state departments of insurance and really playing a critical role. And obviously they can't solve everything with these mitigation grant programs, but can start to build up, this community of practice within, Tim, to your point as well, to these local areas. And, I'm going to jump to Dale here, and Amy, I'll come back to you in a minute. But, we've been focused a lot on property. Right, but there are other impacts to disasters, thinking particularly around health, that can have even a longer lasting impact in communities over time. And Dale, maybe you could speak to some of the work at the SOA looking at sort of the health impacts of disasters.
Sure. It's really important for sure that, property or even avoidance of physical injury are really important to focus on over the first 12, 24, 48 hours of these extreme weather events. But we also have been studying that once that event happens and time passes, there's also a really important consumer aspect of watching out for their own personal health in the 1 to 2 weeks after the events occur. An event goes through, it's a tornado, it's a wildfire, it's a hurricane, extreme precipitation. And that just, it may have property impacts, or it may leave behind damaged property, wetness just everywhere. And that becomes a big health issue for consumers to deal with, the existence of mold, or, the evolution of smoke from the wildfire. In a lot of cases, property damage leaves a place with no electricity. Generators are used. You see this huge increase in carbon monoxide poisoning that happens over time. So we've been studying, probably the biggest thing that we've done is a big study on the impact of hurricanes on health in the 1 to 3 week period after the hurricane has pushed through. And you just see a really important growth in health risks that occur that consumers, really need to be aware of. So we look to continue even more of that research, looking at more current studies. The last one that we did runs through about 2020, 2021. Obviously, we've had even more severe rainfall and precipitation and hurricane events in recent years, and you continue to see the healthcare calamities that are happening in some of those communities when lack of electricity, when the healthcare system is trying to flex to a new moment because of this event coming through. And really try to advocate a little bit for, yes, property is of first importance in mind one, but get the consumer base to also be thinking about, hey, there's going to be a 2 to 3 week period even after the event where healthcare needs are going to be really important to be watching for.
Yeah, so very interesting, right? And we had sort of this conversation at the NEIC around, trying to, more messaging on health impacts. And so it's not just property data that needs to be available. It's also sort of these other, I'll call them indirect, impacts from disasters. And Amy, I'm going to turn back to you. Maybe you could comment on that in terms of United Policyholders, what you're doing there. But you also mentioned this notion of disclosures before. And so, I mean, this is a prominent, idea, I guess, within the climate space, that information needs to be disclosed. And so you mentioned that earlier with homeowners. So could you comment on sort of those two aspects?
So in terms of disclosures of risk, I mean, I think that when a policy is purchased for the first time, there are a number of states now that are requiring some disclosures of the different features of the policy that you may or may not have, right? California has a disclosure that says, oh, you have replacement, or you have, I think we've all been kind of, I've been pretty surprised over the years at how many people didn't seem to know that flood risk was excluded. I do think that insurers need to do a better job at being candid in simple language about what's covered and not covered. Because when you look at Florida, and I was just down there last week, and the market has gotten, the policies that are available in the market are so complicated now. There are, these roof charts that have a lot of math, and then caps on mold, water, etc. Those kind of things, if people don't know about them, it's really obviously a mess for everybody, right? Because they didn't really have a chance they didn't, if they weren't aware. I had a guy ranting at me about how he tried to get a sample policy, a copy of his policy, but they wouldn't send it to him, and he wanted to be a careful consumer. And there's been great work done at the NAIC over the years, on how do we give people information in bite-sized, simple language, and we've made some progress. But I think, always I'd like to see insurers do a better job at being candid about what's covered and not covered in advance, so people can be prepared. So that was the one piece. I think, what was the first question? I've now
just if you're doing any work around health related, messaging or.
Yeah. Mold and smoke. I think, the wildfire, all the issues around exposure to wildfire smoke and thermal damage, very hot, pardon the pun, area, where, there's more awareness in wildfire impacted communities about the health risks of moving back into a home that may not have been properly remediated. And of course, insurers are sensitive about how much they want to pay for testing. And so there's a lot of a conflict, and, my organization tries to educate and inform and help people get to trustworthy experts that are not going to exaggerate, but that are also not going to understate, because it is, the more we know, the more scary things are, right? I think that goes to what's happening with insurers and all the risks they can now see so much more vividly. It also goes to what people know about the dangers of mold and the dangers of smoke. The more science, the more costs, the more people, if the damage used to be, you could just get a plumber to come in and, it'd be a couple $100. But now if there's a risk of mold, you have to get the guy with the special certification, becomes more expensive. The insurers start to want to limit the coverage. It's a bit of a challenging dynamic.
So Tim, I'll bring you in here too. Can you maybe speak to disclosure, in terms of Fannie and how that's evolved, for home buyers?
Yeah, I'd first want to echo what Amy said about, we've talked a lot about affordability and availability of insurance. One thing that has changed is terms, right? And when terms change about what is a covered claim, that's really hard for an individual consumer to understand. For us, we've always made our policy very clear in terms of anybody who we're going to guarantee as a mortgage has to have a full homeowner's policy. There's not really any carve outs allowed. And so that is really in place to probably protect the consumer. The other place that we're really focused on is just disclosures at the property level. And there are some states that have really strong disclosure laws, and there are a lot of states that don't. And there are far more states that don't than states that do. And that really matters, because in the end, when we look at just the impact of voluntary insurance, you can track the use of voluntary, for instance, flood insurance. Voluntary flood insurance is very different in states that have very strong disclosure laws, right? So it is having an impact. And I think the other opportunity we have is disclosures at the time of the closing table is too late, honestly. We got to move it up the cycle and provide disclosure earlier on in the process. and more fulsome disclosure. The first thing, talking about climate is a really long-term topic, but if you're buying a house and you have to understand that that house has had a claim in the last 3 years, or if the flood premium has changed by 20, 30% in the last couple of years, that's something that's actually really actionable for you. So we're trying to work on what does it take to get greater disclosures across all perils, at the property level, and how do you move up the cycle in terms of getting the information to people sooner when they're shopping rather than when they're at the closing table when it's really hard to change your action.
Right. So, and this is going to be the time for my last question. I'm not sure we'll have time for closing comments. I think we have about 4 minutes left, but I want to switch gears to just we just talked about, sort of policyholder disclosure, but there's also a push for insurer disclosure as well. And Dale and Jennifer, you've been working on some of this in relation to the NAIC climate disclosure. Dale, why don't you go ahead and kick it off on that?
Yeah, no, it's really great to see the evolution of the climate risk survey by the NAIC into a broader climate risk, financial disclosure, awareness of risks, and then what are the financial assessments or sides that go with those risks emerging. So we've been studying the submissions by the insurance industry over the past couple of years. I think they're making good progress to be a little bit more descriptive. It's clear that property casualty insurers are taking a really strong lead. The CAT modeling that Jennifer was describing is a big part of that. More and more incrementally, you see life insurers and health insurers recognizing different climate risks. And for those companies, sometimes it's more on the asset side of the balance sheet that climate risks are occurring. But it's great to see kind of this incremental progress towards the Task Force on Climate Risk Financial Disclosures, a more universal standard across the world that is happening in the U.S. insurance industry.
Jennifer, do you want to build on that, and maybe even speak to what Dale was just mentioning, sort of this more universal framework that the NAIC ended up adopting, I guess, a couple of years now?
Yeah, absolutely. And it's really building on a much longer timescale. In 2010, the NAIC developed a climate disclosure. So insurers are really accustomed to answering these types of questions, thankfully, because it's been in place for so long. But in 2022, the disclosure was aligned to the Financial Stability Board's Task Force on Climate-Related Financial Disclosures. That standard was developed in 2017, and then it's been implemented pretty widespread. It's kind of labeled as the gold standard. And really it's about identifying, assessing, and managing climate related risks and figuring out how insurers are doing that across 4 categories of governance, strategy, risk management, and metrics and targets. So as Dale mentioned, we've been looking at the 2022 filings that came in or came in 2022. They were 2021 reports for these insurers and kind of assessing where they fall. And by and large, we found that property casualty insurers are the most advanced because they have been, looking at weather related risks to property for a long time. But I think there's a lot of opportunity for health and even life insurers to start looking at these a little more closely. They've, I think, made good progress in terms of governance structure and putting those things in place, but there's probably more that they can be doing to actually assess and manage the risk as opposed to just sort of identifying it. And part of that comes into, the repricing health policies every year. And so there might not be an immediate health impact from a disaster, but there could be some longer tail issues. So that could help or could, potentially impact both life and health insurers. And then certainly I think they're looking at it on their asset portfolios in terms of both their investments as well as their asset holdings of real estate. So for a health insurer that owns a lot of hospitals and clinics, they're looking at mostly their disaster planning right now, but they could be looking at, how CAT prone are their actual holdings of the properties.
So thank you, everyone. We covered a lot of ground here. We talked about risk assessments and different tools that account for climate. We talked about messaging to consumers. We talked about mitigation programs. We talked about health impacts. We talked about disclosures to wrap everything up. I'd really like to thank our panelists who I think really gave us a wide ranging view of a lot of data-driven insights to help consumers make more resilient choices. Thank you.
Hello, I'm Roy Wright, President and CEO of the Insurance Institute for Business and Home Safety. IBHS is a 501c3 nonprofit. We're enabled by the property insurance industry's investment. We conduct building safety research that really focuses on leading to real-world solutions for home and business owners, helping to create more resilient communities. No other facility in all of North America can conduct the full-scale building science research that we do here at IBHS. And it's not research just for the sake of research. Our work at IBHS develops solutions for property owners and communities. Solutions that are achievable, affordable, and effective. One of those solutions is our Fortified program. It's a voluntary construction and re-roofing program grounded in decades of IBHS science. Both as a retrofit to existing structures, and when constructing new buildings, Fortified strengthens homes and commercial buildings against high winds and hail, hurricanes, and even tornadoes. Fortified is a critical tool to reduce losses associated with severe weather. The techniques that we require in Fortified, they keep the roofs on, water out, and those blue tarps off of houses and multifamily structures as well as commercial buildings. Well, those who can afford to improve the resilience of their own homes, they should be nudged to do it. But Fortified grant programs provide an important pathway for those who need help achieving that resilience. At IBHS, we've seen the critical role that these Fortified grant programs play in strengthening the resilience of homeowners and communities, reducing preventable losses, and developing strong, healthy markets for resilient construction practices. With the Alabama Department of Insurance leading the way, Fortified grant programs are growing all across the nation. We've seen state grant programs expand from Alabama to Louisiana, South Carolina, and Minnesota, with tens of millions of dollars invested and thousands of designations achieved. In North Carolina, a grant program managed by the Wind Pool, the North Carolina Insurance Underwriting Association. It has become the most active grant program in the entire nation, providing grants resulting in nearly 10,000 Fortified designations in the Outer Banks, Barrier Islands, and beyond. Outside of the state context, the Federal Home Loan Bank of Dallas announced the new Fortified grant program earlier this summer across its region of New Mexico, Texas, Arkansas, Louisiana, and Mississippi. These grant programs, they've been joined by other public investments in Fortified, including disaster recovery and affordable housing programs in states, reaching from Louisiana and Iowa. You see, public investment in Fortified, it really matters. These investments are incredibly effective. First, Fortified grants address a critical need to retrofit our existing housing stock with resilient roofs, strengthening the resilience for thousands of families. Second, Fortified grants help foster both the supply and demand side of a market for resilient construction. Roofers and contractors, when they become familiar with Fortified in order to participate in the grant program, they can then carry that knowledge into their other business. Homeowners, well, they learn about Fortified, sometimes through these grant programs as well, and then the program really can take off. Back during COVID, when Hurricane Sally hit Alabama, the grant program had created enough proof points that neighbors saw the importance of a Fortified roof and said, I want that. In combination with other policy levers, such as building codes, as well as the education and the engagement of key stakeholders, yes, the homeowners, but the builders, the roofers, realtors, and insurance agents, the grant programs create a new market and a new narrative for resilience within a state. Let me close by sharing the effects of Fortified at the smallest scale, one family's home. A couple years back, just before COVID shut everything down, I spent some time with a homeowner who received a Fortified roof retrofit in Alabama. The homeowner, Mr. Adams, he told me, well, I didn't really fully understand Fortified. He knew it was a good thing. So I leaned in and I said, why? He replied, the buckets stay outside. Used to be every time it rained, I went running around the house to place the buckets in just the right places to collect the water that leaked throughout our home. But now with my Fortified roof, when it rains, I don't have to do anything. At night, just sleep. The buckets stay outside. That's resilience. Achievable, affordable, and effective resilience.
Good afternoon, everybody. Thank you so much for joining us during the Connecticut 2023 Climate Conference. And thank you in particular for joining our panel on Fortified Resilience, Legislative Initiatives for Building a Resilient Future. All of you should know by now that where you find your agenda, you will find the panel descriptions and the bios of our distinguished guests today. So our panel today is really going to specifically talk about what states are doing to combine policy and regulation and resilience and making it work for the citizens to build better and stronger communities so that they can take whatever weather events or climate risks come their way and keep moving forward in a positive way. So we're going to start off today by asking Michael Newman with IBHS to kind of set the stage for what do we mean by resilience and what's the science out there that many of us are using in our states and in our regions to help us look to the future of how to better build and how to be able to take what the weather is doing on a daily basis and keep our families and communities safe and ticking along. Michael?
Thank you so much, Julie. I'm just going to share my screen. All right. So we really appreciate being included in this critical discussion. As of today's taping, and that's mid-October, 2023 has experienced a record 23 separate billion-dollar severe weather and climate events. There have been 64 major declared disasters impacting thousands upon thousands of people. The risk posed by climate change, severe weather, and wildfires, it is real and it is present. And yet the message I hope you take away from today's panel is one of hope. Hope because the solutions to mitigate these risks are not just knowable, in many cases they're known. And hope because in states all across the country, policymakers like my esteemed panelists today are taking these science-based solutions and incorporating them into policies that will help families, businesses, and whole communities. I want to briefly introduce you to IBHS and some of the science-based solutions that are helping reduce risk and prevent avoidable suffering all across our nation. IBHS is a 501c3 nonprofit research and risk communications institute. We're fully funded by the property insurance and reinsurance industry, and we're able to recreate severe weather, high winds, rain, hail, and wildfire, and study at full scale how to make our homes and commercial structures more resilient to these perils. We push forward the boundaries of scientific knowledge and then translate the findings we make into actions that help property owners reduce their risk. We fundamentally believe that the damage, the disruption, and the dislocation, all too often associated with severe weather, can be reduced and in some cases even prevented. Today, I want to give you a taste of these findings and solutions across two perils: high winds and wildfire. Now, we've been studying the way that wind attacks structures for more than 30 years. What we found in the lab and in the field is that the damage caused by high winds, whether coastal hurricanes or inland severe convective storms, follow a consistent pattern, a progression of damage that repeats over and over again. When it comes to wind, duration and intensity drive losses. Overwhelmingly, damage starts with the roof cover, and then losses cascade from there, from the roof cover to the wall cover to the roof sheathing and structure, eventually resulting in total collapse. Now, the good news about consistent patterns of damage is that they can be studied, understood, and mitigated. IBHS's Fortified program, a voluntary construction and re-roofing standard designed to reduce damage from hurricanes and high winds, provides a system of mitigation actions that reduce loss and keep families in homes after storms pass. The Fortified program applies to single-family and multifamily housing as well as commercial structures. Across all 3 lanes of the program, we have 3 levels of increasing resilience: Fortified Roof, Fortified Silver, and Fortified Gold. All of them are grounded in keeping the roof resilient. So if there's damage to the roof cover, water stays out of the house or out of the structure. We are well over 50,000 fortified designations across 26 states, and by every measure, the program works. I'll now turn to wildfire. As the terrible wildfires in Lahaina viscerally demonstrated to us yet again earlier this year, terrible damage occurs when wildfires attack communities. Jack Cohen, who many consider to be one of the parents of wildfire science, says, community wildfire risk should be defined as a home ignition problem, not a wildfire control problem. That is to say, we cannot suppress or control our way out of this wildfire crisis. As the built environment and its infrastructure goes outward into the wildlands, the probability of ignitions near or within our neighborhoods also increases. And as this graphic shows, once a wildfire enters a community by igniting a home, it sets off, or it can set off, a chain effect, resulting in suburban conflagration. The good news is, science is beginning to catch up, and we now understand some of the key pathways that embers, flames, and heat result in home ignitions, and in the neighborhood context, suburban conflagration. More importantly, while there's still more work to do at the community scale, we now know how to reduce the risk of individual home ignition, saving both the home and potentially stopping the conflagration before it can get started. Our Wildfire Prepared Home program applies this knowledge into a suite of mitigation actions that, when undertaken collectively, reduce the risk of home ignition from wildfire. There are 3 areas of the program: mitigation actions having to do with the roof, with the building features like installing ember and flame resistant vents, and critically defensible space. I want to highlight for a moment the importance of having a non-combustible zone 0, or also called the home ignition zone. It's that 5-foot area all the way around a structure, and it's critically important to keep combustible material out of that area. There's an additional set of mitigation actions that, when undertaken, can further reduce risk, and we have an additional level of resilience in our Wildfire Prepared Home program called Wildfire Prepared Home Plus. So thank you all very much. I'm really looking forward to hearing from my co-panelists.
Thank you, Michael, very much. Now let's meet the rest of our panelists. Joining us today is your moderator. That's me, Julie Shaw-Woodard. I am president and CEO of Smart Home America, and we are a nonprofit that works very closely with IBHS, or the Insurance Institute for Business and Home Safety, which you just heard Michael talk about the awesome science that comes out of there. For years, we have been taking the science of IBHS and integrating it at the local and state level. So of those almost 55,000 designated homes and structures and commercial properties, we hold almost 45,000 of those in Alabama. We've been doing it a little bit, and we work with other states to try and help them get to the level of resilience that we are in a hurricane and tornado area. Also on the panel today, and I'm going to read off of my paper so that I don't make a mistake, is Commissioner Lara from California. Welcome, sir. Thank you for joining us. Commissioner Stolfi from the state of Oregon. By the way, met some great citizen groups at a wildfire conference in Commissioner Lara's state 2 weeks ago that really are looking forward to doing resilience in Oregon. So that was exciting. And not least, but last on my list is Mr. Peter Brickwetty, who's with the great state of Minnesota, who has just taken a big step in getting into the game of resilience from their policy levels and what they hope to do there. So we're going to go down a list of questions. We all agreed we wanted to do a conversation for you, so you're not just being talked at. And we're going to start with a question, and we're going to go through the panelists and let them answer it. So I'm literally going to read a question for our panelists, and then we'll discuss it. In your states, gentlemen, you took advantage of somewhat unique alignments between regulatory functions within your respective agencies to pursue policies that encourage resilient structures. How did that help you, and what advice would you have for states that might not have those same functions aligned under one roof? So we're going to go down the list, and we're going to start with you, Commissioner Lara.
Great, thank you. It's great to be here. So in California, as you know, we're facing severe fires that are really unprecedented, and climate change is really intensifying those fires. So my goal is really to empower communities to become safer from these wildfires, and insurance should only be part of the recovery process, but should provide incentives to reduce that risk. So as the regulator, I've convened the state's emergency management response agencies for the first time, by the way, CAL FIRE, the Office of Emergency Services, the Governor's Office of Planning and Research, and the Public Utilities Commission. And we spent 1 year working on and comparing our existing programs and hearing from consumers and insurance companies, from researchers like, of course, IBHS and the University of California, to help us develop a consensus on home and community wildfire mitigation. Once we got that consensus, the list of homes and hardening actions, which we all call Safer from Wildfires framework, we started then a regulatory process to require insurance companies to provide discounts for homeowners and businesses that took, that home hardening and community mitigation action. So we first got together, came up with that consensus, and now use our regulatory framework to provide these incentives. So what this means is that policyholders now have a clear and consistent incentives that are achievable and backed by science, and policyholders have these now new incentives that no matter which insurance company is writing their policy, even the FAIR plan, are going to get discounts for hardening their home. And that gives consumers additional confidence that their investments in their home, especially the hardening part, will be rewarded through their insurance prices. So that was a big win for us here in California.
Thank you, Commissioner Lara. Commissioner Stolfi.
Thank you, Julie, and good afternoon, everyone. And let me start by thanking Commissioner Mais and the Connecticut Department for putting on this excellent event and for inviting me and my fellow commissioners and others to join. Very happy to be here. So like Commissioner Lara in California, in Oregon, I'm the Oregon Commissioner. Wildfires are the major disaster, the major hazard that we're dealing with. And the last few years for us have been extraordinarily difficult. We've suffered more losses in the last 3 years than the 40 years before that combined. And it's caused a real shift in how we as an insurance regulator and everything else we do and other state agencies have worked together and come together over those last few years. As for our agency, so it's a pretty big, 900 plus professionals working here, agency. We've got the whole financial services sector, so including insurance. We're responsible for the state building codes as well. And we have Oregon OSHA. And all three of those play a pretty big part in resiliency, whether it's structures or individuals preparing for and responding to disasters. And as Commissioner Lara said, an insurance commissioner, we can't do this on our own. It takes a lot of people in a coordinated way to respond. And I think it's important to stress why, right? In Oregon, we've signed on to, as I'm sure a lot of other states have, the National Cohesive Wildland Fire Management Strategy, which has three main goals, right? Adapting adapted communities, restoring and maintaining resilient landscapes, and responding safely and effectively to wildfire. And say addressing all three of those things is really critical in not only responding to the wildfire dangers in our state and other states, but in controlling the insurance impacts that we and others have seen. I really see insurance as kind of a barometer about how well a state is responding to the risks that are addressed. And for us, I'd say having all three of those subject matters in one agency has really helped in lots of different ways, big and small, right? Can't be everywhere at once. So it's nice to have some partners in your agency. So our building codes experts are sure that an insurance perspective is always shared. We also have different stakeholders we have long-standing relationships with. So as we had to respond to our wildfire emergency from on the insurance side, we benefited from our building code division's longstanding relationships with the fire marshal's office. And we also then have kind of an easier way to share expertise and perspectives across our divisions and across the agency. But I'd say, don't worry. I know not a lot of insurance departments have even half of all of those things together. That's absolutely fine. It is all about relationships at the end of the day. And if you don't have every division that we do in your insurance department, you just maybe have to work a little bit harder to make sure you're connected.
Thank you, sir. Now for Assistant Commissioner Peter Brickwitty.
Thanks, Julie, and I'll echo the thanks to Commissioner Mais and the team at the Connecticut Department. Really appreciate the opportunity to be with you today. So similarly, the Minnesota Department of Commerce is the state's insurance regulator, but we also have a somewhat unique structure amongst our insurance regulatory colleagues around the country. So we also have the financial services sector here under our roof, but we also have Minnesota's energy programs, and we advocate for the public interest before our Public Utilities Commission. And so that combination of insurance and energy work really has put our agency at the forefront of climate-related activities across a wide sector of our state's economy for many, many years. And it's that intersection that has led to some of the work that we've been doing here in our state recently. We also have we have all the weather in Minnesota, and we have lots of the perils that some of you and our colleagues on the panel are facing as well too. We're a top 10 state for wildfire risk around the country, but we also have severe convective storms, winter weather, and our most expensive peril is actually oftentimes hail. And it was that combination of severe convective storms and hail that led us to really start looking at some of the examples from other states, particularly in the Gulf Coast, related to their work in partnership with IBHS to try to look at insurance risk reduction mechanisms that people can do in their homes. And so our combination of experience being the state's administrator of the federally funded weatherization assistance program and the state's energy assistance programs have both given us the experience of running large grant programs and working with local community partners to make sure that those dollars flow to the people who need them. It also has given us experience in working with the workforce development that's necessary to build out those types of programs. And it also helps us understand the geography of where people for those means-tested, federally funded programs live in our state. And so as we started to think about where we might get the best bang for our buck for insurance risk reduction, we also started to think about how we could draw upon that understanding of the geography of where low-income Minnesotans are living and what kind of structures are they living in. And so that confluence, that Venn diagram, if you will, has really informed our thinking as we've started to build out our program. We received $1 million from our legislature this past session to do that initial build out of a program. So we're giving ourselves 2 years worth of runway to think about how to do that, but leveraging the experience that we have across our department. And as Commissioner Stolfi said, if we're unique in that regulatory design, that's helped us. That's been an accelerator for our program. But I think reaching out to your colleagues who run those same programs and building those partnerships across your departmental silos can also really help if you're thinking about doing those same sorts of things in Connecticut.
Thank you, sir. Commissioner Brickworthy, I'm going to stick with you just for a second because you kind of sort of covered the next question, but I want you to think about what you would add to how you just answered that last topic. Which external partners did you engage with throughout your legislative or rulemaking process in your state? And why did you bring them into the work? And because you're the newest to set up a grant program, so you've lived through all of this. Just adding on to how you answered that first question.
Yeah, thanks, Julie. And it's both a past tense question and a present tense question and a future tense question, because those conversations are really ongoing. So in Minnesota, Michael mentioned earlier, and Julie, you touched on it as well, the real success of tens of thousands of fortified roofs are now on homes across the country, of which I think in Minnesota right now we have 4. So we're really starting at the ground floor and trying to build an environment in which we have consumers who are aware of the opportunity that this provides, and B, we have the workforce to actually do that work. And so that requires a real vast array of partners. So our friends at IBHS have been incredibly generous with their time in helping us understand both the science behind the standards, and also helping us communicate with building professionals, architects, and our insurers about the technical details that are beyond my capacity to be able to explain. We've also needed to really talk with legislators about what this is and why we're talking to them about an insurance solution for something that is really affected and rapidly changing in our climate context as well too. So breaking down those silos at the legislature has been really important. And as we've continued to start this planning process over the next 2 years, I think those relationships are going to be even more important. And I'm really grateful to our regulatory colleagues at other insurance departments who have more mature programs and can give us a bit of a roadmap to understand what has worked in those states. And we can think about those colleagues here in Minnesota and maybe sometimes things that haven't worked well so that we can avoid those wrong turns and stay on the road towards building a successful program. So it's very much a work in progress where we're trying to bring national experts together with people on the ground who are close to the work and close to consumers to build that ecosystem where a grant program can really start to accelerate this climate adaptation that we want to try to build in Minnesota.
Peter, if I can just emphasize something you said, because I think it's really, really important. When we think about grant programs and other public investments in resilient construction, whether that's fortified or some other standard or methodology, it's helpful because it helps families get into stronger, more resilient homes, and that's of value in and of itself. But also a point that Peter made is that it helps create supply and demand for resilient construction practices at the same time. The grant programs, they build out a workforce that's familiar with more resilient construction practices than is otherwise required by building code. And it also creates a supply of homeowners who are seeking out those grants because they want a stronger roof, because they want a more resilient home. And as they talk to their neighbors, all of a sudden people start talking, oh, this is available. This is something I might want to invest in. And so having the public investment really catalyzes those private market forces that can lead to more resilient decisions in a much wider swath of a state or a community than just those homes that the grant program touches.
Thank you, gentlemen. Commissioner Lara, who are some of the external partners that you engaged with throughout the development of your program?
Yeah, no, we really try to, cast a wide net. Researchers, consumer groups, insurance trade associations. We really engage directly with multiple of the wildfire researchers from the University of California, and of course, as well as IBHS, and also the expertise from our national association at NAIC. They were very helpful in helping us see what other states were doing. And one of the underappreciated aspects, I think, of this risk mitigation is that all the states can share their experience and expertise through the NAIC. And so we really encourage our states to work with us as the co-chair of the Climate and Resiliency Task Force. We've led the development of the risk mitigation dashboard, which now really brings all this information together, bringing examples from several other different states and how to fund the mitigation and how to communicate those risks to consumers is critical. So, as we engaged with several external partners, we also realized we need to create a dashboard internally through the NAIC to be able to make sure that all the states had access to this information as well.
Thank you, sir. Commissioner Stolfi, what are the partnerships and the collaborations that have been created for you in your state to move forward with resiliency?
Absolutely. Thanks, Julie. And maybe I'll start by thanking Commissioner Lara and his staff and his team again. We, in 2020, had the most devastating wildfires that we've ever had in our state. And it wasn't something we'd ever experienced or were necessarily prepared for. And, within a few days of that, had the commissioner and his staff on the phone with our teams so we could learn from them and the unfortunate experience they've had for longer than us and how to respond to it and prepare for the next major disaster. But other than that, I'll say working with others is kind of the Oregon way. We're a very open and transparent and collaborative state. And so over the last few years, as we've been responding to this increased danger, I got to say, insurers, I'll start right there. They've been, I wouldn't say surprisingly, but they've been really good partners. And it's not surprising because, who's sending the notice? Who's telling that property owner that they're not being renewed or that their rates are skyrocketing? It's an insurance company, and they've had to deal with the backlash and the response to those decisions, which are driven by the increased disasters and the environment that climate change has put us into. So they've been very eager to work with us in ways to improve disclosures and notices and create programs to provide incentives and discounts. So insurance companies, our state fire marshal's office has been an unbelievable partner. And we've worked with them to develop community risk reduction programs and defensible space reviews. And they're very helpful because they are there in the communities on the ground, looking at and visiting properties quite often, and can work with those property owners to identify ways that they can increase defensible space. And then they have even developed, working with us and some others, a tool that local fire service can take, perform a defensible space assessment, and then have a document certified by that fire professional that they can take to their insurance company as a means of getting a discount or an incentive. Consumer representatives, as Commissioner Lara said, are very interested in anything we can do. And the last one I'll say are pretty obvious, but legislators, right? So those 2020 wildfires I mentioned, in one weekend, we lost almost 4,000 structures, and most of those were in one community, one legislative district. So I can tell you that state representative has been an unbelievable partner and advocate for any and all resiliency and response efforts. So really educating her and working with her and her team on insurance and the insurance aspects to this has been incredibly beneficial so that she can support our legislative initiatives and we can support and help inform hers.
What role should consumer disclosures play in informing the public of resilient issues? There are prescriptive steps that regulators can take towards resilience, but also consumer disclosures or notices to consumers that can be made that can be helpful. So what role should consumer disclosures play? I am going to start with you, Commissioner Lara.
Great, that's a great question. I think risk communication is essential to helping communities prepare for the risks that they face, and disclosures either in the insurance policy itself or at the point of sale in a property transaction, I think can really help communicate the risk to homeowners and communities. So in California, my wildfire mitigation regulations not only require that mitigation actions be incorporated into insurance pricing, but it also required that wildfire risk scores be disclosed to the policyholder. So now that a policyholder gets the risk score, they can appeal that score. And if they believe if they believe there's an error, that really helps them understand how important mitigation is and how that is tied to their wildfire risk score that will ultimately determine if they have access to insurance or not. So I think without clear risk information, it's really difficult for homeowners and businesses to know how to prepare and what steps they need to take to reduce their wildfire risk. So, these disclosures are critical to not only understanding the risk, but the importance of mitigation. And so, we're starting to do that here in California. You might get some pushback because, you might say we're disencouraging people to buy homes in certain communities. But at the end of the day, we want people to come in with their eyes wide open and understand the risk profile and also the risk score, something that they didn't have access to before my regulation. And before, they would just get a risk score that the insurance company would provide and tell them, we're going to not renew you for this. But when the consumer wanted to get that information, they would say it was proprietary information and we couldn't give that to you. The department didn't even have access to that. So now that's now changed. We're also able to see where these risk scores are going up in certain communities so we can try to tackle the issue before we have another catastrophic wildfire.
Thank you, sir. Commissioner Brickletti?
We still see consumers far too often finding out or believing that they are finding out about changes to their policy or to their coverage after an event and after their home has been damaged or their property has been damaged. And so I think, disclosures are always going to be important to understand when those changes are going to occur and to really understand what your policy is. But I really want to echo what Commissioner Lara was just talking about, that there's also so much opportunity for consumers to be able to act and to make informed choices on the front end before something happens, which is always going to be the less expensive to your pocketbook issue for a family. And so I think that is something that we all can continue to get better at, and working with our insurance companies in all of our states to be able to figure out how we do that communication and do it effectively at all levels, so that you can understand what that value proposition could really be to make choices and take actions before wildfire were to come through your community or a storm were to come through your community, and really then put you in a reactive position instead of a proactive one.
Thank you, sir. Commissioner Stolfi, would you like to add to those comments?
Oh, absolutely. Yes. Disclosures and notices are immensely important for consumers, right? Property owners are the people who are most at risk, right? From these disasters. They have the most to lose, that literally their house that they can lose in a disaster. So there's huge incentives for property owners to mitigate risks and be more resilient. But what we found is they often don't know what they can do, or importantly as well, what the effects or benefits of doing those things are. So, we worked with our legislature and introduced and passed a law this year that did a couple things. One is it requires enhanced disclosures. So if an insurance company is going to cancel or non-renew or increase premium rates due to wildfire risk, they have to, starting next year, give very detailed notices explaining exactly what property-specific characteristics led to or influenced that decision, describe the risk, score or anything that company might use, and importantly, tell that property owner what risk mitigation actions like defensible space, home hardening, community risk reduction activities that they can do to make their property more insurable. The law also requires, and we looked at what California did, and we tried our best to improve on that. So around this incentives and discounts. So our law requires, both for underwriting and rating, for those plans to reflect how that insurance company addresses or considers wildfire risk mitigation actions, such as defensible space, home hardening, and community risk reduction. And importantly, requires that insurance company to put on their public website exactly what discounts or incentives they're providing for all of those measures. We're then going to take that and collate it and make it publicly available in order to create some competition in the marketplace. And, we did all those things for a couple of reasons, right? We want to help avoid misunderstandings. There was, tell a short story, there was a situation happened last summer where our state had sent out notices to almost 200,000 property owners about a draft wildfire hazard map that the state had developed that most of these property owners never heard of. But this notice from the state let them know that their property had been identified as being in the WUI and in a very high or extreme risk area, and gave them an opportunity to appeal that. At the same time, these property owners were getting notices from their insurance companies that their policies weren't being renewed. And it created a mass amount of confusion and misunderstanding from these property owners that the state's efforts at creating this educational tool about what property level risk there was causing an insurance company to non-renew a policy. So, giving better and more enhanced disclosures can help avoid that, empower, as I said, consumers to be more resilient, and understand what exactly they can do to mitigate the risk on their property. Information that most of the time, of course, when you're mitigating risk in order to maintain your insurance or have your premium rates not go up, that's information that only the insurance company can provide. So we think that insurance companies should be doing that.
And I'm actually going to add another idea in there that's going to pull Michael into this conversation. Neither IBHS nor Smart Home America work within the consumer disclosure, but I will say that the work that's been done in states that are moving resiliency successfully, we've also affected, right, what that building code is, which then affects the knowledge level of the insurance companies when they're coming in to rebuild. But more importantly, if you look at model programs like the IBHS Fortified Suite of programs, right, there is that confidence in that designation. So those homeowners actually have something going in that they know the details about their structure that they would never know if it was just that it was built to code. They wouldn't know much. That gives confidence to the insurers as well, but it also sort of protects that homeowner. It's a consumer protection, and the smart home thinks of it as a consumer protection because you've had this person that's been working with that builder, roofer, contractor that now has this documentation that that homeowner has to stand behind them when their insurance rates go up, when there's an effective change to their policy. They have some negotiation with that knowledge that's proven because it's gone through a rigorous inspection process. So I was thinking about that because the consumer awareness is so important, and it is such a big challenge after any disaster. And so every little thing that empowers a consumer post-disaster when they're in that midst of chaos is just one more inch towards successfully coming out on the other end of it. Michael, you agree?
I agree, Julie. And I was thinking as Commissioner Stolfi was talking, just how important it is for homeowners, for consumers to understand not only their risk, but what to do about their risk, how to mitigate it. And the really important role that insurance departments and insurance commissioners all around the country can play. Just last month, IBHS co-hosted, along with Commissioner Lara and the California Department of Insurance, a demonstration in California on the importance of defensible space. We set up two little miniature structures. One was built to stronger home hardening and the right type of defensible space. The other one was not, and they were subjected to identical ember attacks. And you may have seen it on the news. Commissioner Lara can speak to it. The results were striking. And I think that type of demonstration in collaboration between IBHS and the insurance industry and insurance regulators can be really, really powerful in helping to teach, educate, and empower consumers on what they should do about their own risk.
Well said, sir. Okay, I'm going to combine the next two in the interest of time, because we have several good questions we need to get to. So I'm going to combine the next two questions. And because we've talked about the Minnesota grant program. So we've talked about grant programs and sort of that overview, and that there's other states that do that. And we've also talked about the fact that there's mitigation of, there's mitigation things that homeowners can do themselves, but there's also mitigation efforts that you would need more professional help with, right? That homeowner would have to seek some professional help. But from each of your perspectives in your states, what are some of the programs, either grant programs or just innovative things that you've started? And where do those community level efforts for mitigation take hold? And where do you see the most effective ones taking off in your state? Because everybody's state is different. And if that question is too convoluted, just tell me and we'll reword it. But I am going to start with you, Commissioner Stolfi. Taking into effect, like if you wanted all of us to know the things that you've latched onto for Oregon and what you hope for it to look like, be it grant programs or just innovative products for homeowners to consider, or just how to communicate that risk analysis from a community level and the mitigation opportunities out there.
Thanks, Julie. Great question. So I'll point out two programs, grants or incentive programs we created, and then talk about the who to work with or how to get the word out. So the first, I mentioned a few minutes ago the devastating 2020 wildfires that we had. In response to that, our legislature gave our agency $10 million to help with home hardening incentives. And the law here, assume it's probably similar around the country, is if you have a structure, a home destroyed in a fire, a wildfire, disaster, you only have to build back to the code that was in effect at the time you built your house. That's the rule across the state here. So that's not great because a lot of these structures were older, and we have adopted R327, the home hardening requirements, kind of across the state, but it's not required. So in order to incentivize homeowners in these high wildfire risk areas to not only build their structure back, but build it back to current code and build back a hardened structure, our legislature gave us this money. We worked with, Peter mentioned having all this grant making expertise. We've never given out grants before. So we worked with all our fire impacted counties to create a program where they were the ones in the communities looking at these structures, helping folks rebuild. We worked with them to distribute the funds. We've given out over $4 million already, a little more than $4,000 per structure to build back a hardened home. And then one other thing interesting, we talk about landscape resiliency. One way that a lot of states are trying to work on that now is around prescribed fires or cultural burns. And we did a study. We were asked to do a study a few years ago about the liability aspects to that, and found a little bit about that. There's a report on our website if anyone's interested. But in order to help incentivize prescribed burns and cultural burns, our legislature gave us and our forestry department $5 million to set up a prescribed fire liability fund program, so that there is a prescribed fire, if it does escape and it does cause damage, there's some state funding there to help people pay for that damage and that liability. And as to how to work with or who, I'd say, communities, right? The best way to get the word out, the best way to work on resiliency is at the community level, right? And there are a lot of community organizations and efforts to do that, local legislators, et cetera. We've really found the fire service is an unbelievable partner. They're there responding to the fires, of course, but they're also there in the communities, in the neighborhoods, seeing what the dangers are, seeing what the risks are. So keeping them informed, partnering with them to get information out about grant programs, about whatever else is going on, has been immensely and hugely important to us. Thanks.
Thank you, sir. So we got our 5-minute warning, and I have one more question that we really want to get to, and that's about the money. So I'm going to quickly ask Commissioner Brickletty, because we heard about your grant program earlier in the conversation. Is there any other thing that you'd like to highlight that Minnesota is doing to incentivize or a little bit different in the world of mitigation?
I think we're going to have to come back to our legislature, as other states have, to think about what are the long-term financing mechanisms for a grant program over an extended period of time once we have it built. I think that exists in an ecosystem of many other programs and a remarkable amount of federal opportunity that's also flowing to states. So thinking about how you can take a grant program in isolation and leverage it with other programs in your states, I think is one of the best things that you can do. And also think about how mechanisms to bring federal dollars into your state, like Green Bank, for example, is an opportunity for you to take the individual health and safety outcome benefits for the residents of your state in their homes and compound them alongside other programs. So for example, we have a small existing program in Minnesota called the Healthy Air Program, which helps take vermiculite out of homes as a remediation program to make them eligible for weatherization. That program, gets energy efficiency and cost saving outcomes in the future for the residents of that home, but it also has health impacts right away, because getting vermiculite out of the home, which was a very common building material in Minnesota and across the country, helps keep you healthier, because vermiculite, when you inhale it, can cause cancer. That has an individual set of outcomes, but if you think about that in a stack that moves from pre-weatherization to weatherization and then to a mitigation program dealing with the exterior of your home, that's an opportunity for you to really enhance health and safety outcomes for people in your state. And if you can figure out how to then leverage that against federal funding opportunities through the IIJA or the IRA, that can be a real exciting opportunity for you and the residents of your state.
Commissioner Lara?
Oh, I think, besides our incentive program, that, as we're seeing the companies really come in at really different types of incentive programs and discounts with their insurance policies, we're looking around 20 to 30% discounts, which is really a significant chunk of money. But we also currently have a home hardening financial assistance program run jointly between CAL FIRE and our Office of Emergency Services. And at this point, only a few grants have been really, reached to consumers, but there's a potential for this program to help communities really take the first steps to mitigate the risk. Additionally, we're going to be investigating to see, even with these programs, it's still going to be very difficult, especially for low income, moderate income Californians to be able to afford the home hardening that they need to do. So we're looking at either different incentives for our diverse, economic, different stratas within our economy. So we're looking at everything from a loan forgiveness program to a tax incentive to a subsidy for our most low-income communities that are living in these sensitive communities. So those are the different issues we're going to be tackling in the future. But again, these really incentives from the insurance companies are a game changer for us, really incentivizing people to do the right thing and giving them that discount on their policy is really going to prove fruitful, as we're seeing the types and the amounts of discounts that consumers are going to be getting throughout California.
Thank you, sir. Michael, let's talk about the money. So tell us in a summary of all of the federal funding that's coming in that will help in so many ways with the mitigation that each of these states is tackling.
Yeah, thanks, Julie. There are the big legislative packages, right? And Peter referenced them before. But I also want to highlight that there are ongoing everyday programs that can help fund resilience. One new program is HUD's Green Rewind. We'll do this again. One program is HUD's Green and Resilient Retrofit program. It's new. It provides something like $840 million in grants, an additional $4 billion in loan authority to help existing Section 8 housing become more energy efficient, more water efficient, and crucially, more climate resilient. That's a new program. It's exciting. Fortified is referenced by HUD, and in this program, and we think that it is a way to take some older affordable housing and make it more resilient for its residents. But there's a whole other set of programs, things like the low-income housing tax credits that flow out in block grants from HUD down to state house finance agencies and authorities all around the country. Things like disaster recovery funds, whether from HUD or from FEMA, SBA's loans that they have available. All of these programs may not be resilience in their creation, but they can be utilized by states, by communities to help incorporate resilience into how they're spent. I'll give you one quick example of what success looks like. Starting next year, the Louisiana Housing Corporation is going to require that any project that receives funding through its low-income housing tax credit program must be built to fortified. That's huge, right? They're saying every single piece of affordable housing in the state of Louisiana must be built with resilience. Those are decisions that can be made in states all over the country, not just in Louisiana. So I think as we think about federal funding, yes, let's look at the resilience specific programs, but let's also look at the vast majority of other programs that may not have resilience in the title, but can be utilized in ways that help enhance the resilience of our communities.
Thank you, sir. And thank you to our audience for joining us today with our panelists to discuss resilience and what it looks like at that local and state level.
Hello, I'm Andrew Mais, Commissioner of the Connecticut Insurance Department, and it is indeed an honor to address this distinguished gathering today. Our department takes immense pride in serving as a host of the third annual Connecticut Conference on Climate Change and Insurance, more commonly known as C4I. First and foremost, I want to extend my heartfelt gratitude to all of you who have joined us in this important event. This conference underscores the resilience and adaptability of our community, echoing the very themes we've explored today. This year's C4I has been a testament to the dedication and commitment of everyone involved. Our esteemed speakers, panelists, moderators, and our dedicated team from the Connecticut Insurance Department working tirelessly behind the scenes. Your contributions have made this conference an exceptional and enlightening experience. Throughout our discussions, we've delved deep into topics that highlight the urgent need for collaboration and innovation. We've learned about forging resilient pathways, empowering communities, and cultivating sustainable practices in the insurance industry. We've discussed bridging data gaps, examined legislative initiatives, and we've engaged in thought-provoking conversations that I hope will help shape our future actions. What is abundantly clear from these conversations is that climate change is not an abstract concept. It is a reality that is affecting every part of our world. As members of the insurance industry, we are not passive observers. We are catalysts for change. The decisions we make today will resonate for generations to come. One resounding message that I've taken from C4I 2023 is the acknowledgement that we share the responsibility to build a resilient future. We have the tools, we have the knowledge, and we have the commitment to lead this transformation. As we conclude this year's conference, I urge each of you to carry the spirit of C4I forward. Let the insights gained here guide your actions and decisions. Let our conversations here reverberate through our organizations, our policies, our communities, our country. Our industry plays a pivotal role in safeguarding our world's future, and together we can innovate, adapt, and collaborate to create a more resilient and sustainable future for all. In closing, please let me express my profound hope that the connections made and the knowledge shared during this event will inspire meaningful change. Let us remain steadfast in our commitment to climate resilience, working together to build a better world and ensuring a sustainable future. Thank you all for your dedication and participation in the 2023 Connecticut Conference on Climate Change and Insurance. I look forward to seeing you at the 2024 conference. And until then, let us continue to move forward with purpose. Thank you.